Hey, hey, what's going on, everybody? Paul, how you doing?
I'm doing great.
Awesome.
Excited about the webinar.
I know it's actually we haven't done one in quite some time. Hey,
It has been a
guys,
while, yeah.
how's the audio going? Bob, Andre, how you doing? Mr. Whitman, how you doing, sir? Hi, man, guys. Thank you for coming. We really appreciate it. Well, we've got a nice presentation set for you guys. So, Paul, what's going on with you, man? How you been?
I'm doing great. Some changes in my life. We moved to San Diego here, so that's been pretty exciting, and it happened right when the market started going nuts. So it's been a challenge trading the markets and trying to get set up here, but you know, it's been great.
Man, that's like a double whammy right there, huh? Market's tanking, and you got to move.
Oh yeah, oh yeah, yeah. But it's been exciting. It gives me excuse to say, hey, I don't want to help move right now. I got to work. So that's kind of nice.
That's true. And I don't know how you do it, man. Now that I've been mostly day trading, like going, there's so many gaps this week. It's been just so crazy. It's so
It has
stressful
been crazy,
sometimes.
and it makes it a little tougher for swing trading because you really have to time your moves here, and you can't do the usual. Usually with us, I've got maybe sometimes 6 to 10 positions at one time, and we're trading throughout the week, and you can't really do that in this market where there's really no rhyme or reason for the move. So you've got to pick your spots, really watch for the oversold and overbought levels, and some other things we're going to talk about today.
Man, I'll tell you what though. I was also thinking about it. Like me and Saeed were talking about it. There have been like it really depends on if you can time the gaps, but the gaps have been so big that it's actually made it really tricky to day trade because you just gap and then you pull back a little bit and then you come up and then you stagnate. Like today we had like what you'd call, I'm not good with candles, but from what I remember you taught me was today is like basically like an inside day almost, right? You're like inside the range of the previous day. So like as a day trader, you have a small range of scalping that you can do. So, I mean, the whole move is in the gap from holding overnight.
You know what I've found in this last, what is it, about 2 weeks now, for my day trading is very different from yours, but really just doing the overbought, overswing type thing that we would do over a week or two in swing trading, which we can't really do right now
Yep.
because of these big gap downs and gap ups. There's so much volatility day trading that you can actually do that on the date on an intraday time level, and sometimes capture the type of move you would be doing on a swing,
Yep.
which doesn't happen very often. But playing these overbought and oversold levels intraday has been what's working for me. Um,
That's
so
true.
really
I mean,
just switching that swing to the day trade. But yeah, for swings, these gap downs have reaped a lot of havoc also, and you really have to understand how to play it and not get too caught up when it happens, because oftentimes they bounce right back, and you really have to stay patient with them.
and that's true too. I mean, I made so many trades, and I mean, I trade really small during these times, but I mean, we've taken like 10-point rips in like UVXY and some stocks, like intraday, and that's basically like a swing trade,
Yeah,
like you.
exactly. You're day trading, making uh, profits probably like a swing trade where you can get these 5, 6 point moves.
So like today, for example, like I traded a DWTI, which is the 3X ETF for oil.
Hmm.
And my max position size was actually 200 shares at any point in the day, and I made
Because of
like
the volatility.
I
Yeah,
made like
yeah.
2,200 bucks.
Oh, nice,
Like
nice.
it's like you write it up for 6, 7 points, and then you short it for X amount of points. And I was even scaling out like 50 shares at a time, which is so small. Like some people trade 1,000 shares, and it's like I mean I learned from you. It's like there's no point if you're going for the real
Yeah,
move.
with this kind of volatility too, with this kind of volatility, if you've got 1,000 shares, depending on your account size, you can't probably have the stop that you want to have it, where you want the stop.
Yeah,
So you have to get a little smaller there.
true. So, guys, a lot of you guys don't know. I mean, as most of you guys know, I'm the head janitor over here at Bulls on Wall Street, and this young man who's actually only a couple years older than me, I actually thought he was like literally 60 years old till about 2 years ago. This young man is my mentor, and if it wasn't for him, I would literally be, working in a cubicle to this day. Maybe I would, as a typical Indian, bought a motel or something like that, but I would have been doing something that was a grinder type of lifestyle. And trading is also a grinding game, but it's something that's really fun. And so Paul's been with us for now over a year, and he's got an awesome program for part-time traders, swing traders, and his methodology is awesome because all the things that I do in my classes and in my chat room on the day trading side of things is essentially just an offshoot of what he taught me as a swing trader. And one of the things that Paul taught me, very early was, you can't trade on a minute by minute basis if you can't see the big picture. And so like everything that I do on a day trade basis is basically based off a swing trade setup and the stuff that I learned from him. And then even the intraday patterns are still the same. Flat top breakouts, flags, base breakouts, moving, break over moving averages and pullbacks, remounts. All of those things I do. I do remounts all the time intraday, like moving average remounts. And like all of those are actually swing trade setups. Like nothing was really reinvented. Things were just tweaked and so on and so forth.
Well,
And so it's awesome like to have him here and talk about this stuff because, I'm doing it a different way now, but the names of the patterns and even the scans I do are all the same. I do 4% breakouts. I do the old PC 2000 PCF scans. Like it's crazy like that. Trading is it's all the same in reality. It's about managing risk, controlling your emotions, going for high reward plays and minimizing your risk. And there's like everything is so simple when you really think about it because now me and him are trading differently, but I'm using the exact same patterns and it's pretty cool to
it's
have him
it's
on.
amazing though. We're trading differently, but I pop in the chat room every once in a while and I'll see what you're doing and I'll take a look. Okay, what was Canal doing here with this trade? And I'll look at it, and if I didn't know it was intraday and I wasn't looking at the time frame, whether it was a daily or an intraday chart, it would look almost exactly like what we're doing on a swing trading methodology. So a lot, I would say, looking at what you do, at least 75% of it has transferred over almost exactly to what you're doing day trading. Obviously, there's some tweaks and some differences that are very important, but the overall methodology and a lot of these patterns, entries are very similar. And I think too, for anybody looking to day trade, having that swing trade base first can be very helpful because when you get into day trading, it's so fast.
It's
And
not even
that's what
helpful.
you did.
It's an imperative because like for example, like in our class, when I do my 60-day class, the first 14 classes are based on the big picture, and then it's
Yeah,
the last 2 days are based on the intraday because like as you taught me, if the wind is not at your back, right? So if you don't have a big picture idea or a thesis behind your trade, well, if you take a good intraday pattern, but the big picture thesis is not there, you're essentially pissing in the wind because the big picture is saying, hey, this stock is going down, and you're seeing a flag intraday and saying, oh, it's great, but the big picture really controls everything. It's so easy to day trade if you get a stock that's going on some epic run, like AMBA or something this year. You ever see AMBA like a few months ago when it broke?
exactly. And I see that a lot.
it breaks out over 80 and goes to 120, everybody wants to short it. But when you're day trading and that stock is just going up every day, it's so easy, right? And having
Why
that
not
big
go with the
picture.
trend?
Yeah,
Exactly.
big picture is the way.
And I see this all the time with report members where they'll email me and tell me I'm having these problems. Will you look at my trades? And I'll look at their trades, and the trend is going up, and they'll continually short, or the trend is going down, and they'll continue to go long. And why fight the trend? It's just like, and some people just have that mentality of just wanting to go against the trend, and really just in trading, you want to make things as simple as you can. And that's what we're going to talk a little bit in this sell-offs webinar here, volatility webinar, is you really want to pare it down and make things easy. There's a tendency when we get a volatile market like this to actually do more and want to do more research. You want to find more stocks when really you should be paring it down and trying to make it easier on yourself. This is a decision-making game. Everything we do, like you were talking about cubicle, you're not mindlessly doing anything. Everything you do, the money you make is based on the decisions you make, and you want to make that decision-making process as easy as possible. So yeah.
That's so true. Guys, the two most powerful things that I've ever encountered, there's three. There's love, there's gravity, and then there's trends. Those are the three like undisputed things that cannot be broken, and that's like so true. I mean, messing with the trend is like messing with gravity. Now, there are signs to know when a trend is ending, but till you see those signs, I mean, you're just stepping in front of a freight train.
Exactly.
Well, let's get this thing moving, Paul. Let's see what you got.
All right. So we're going to go over 14 main ideas here about how to deal with volatile markets, and mostly what we're talking about right now is sell-off, since that's what we're going through right now. And if we go back to the Monday, really when all of this started, on Sunday, there was the China news, and then futures and SPY were down 3 or 4% before the market. That was Sunday, before even Monday morning. My inbox was flooded with emails with people freaking out. They had positions. They wanted to know what to do. I mean, you could just feel panic. And the first thing you have to do is stay calm. You can't control what's going to happen in the market, but you can control yourself. And we talked about decision making, and the best decisions you make are when you stay calm. You think about all the great athletes, Joe Montana, Michael Jordan, who perform in the clutch. Everything slows down for them. It doesn't speed up. And if you're not calm, it's going to come at you 100 miles per hour, and that's not what you want. So the first thing you have to do in that position, stay calm. If you've got some positions, you might take some losses, but you have to, get that panic out of the way and figure out how to deal with it. That's number one. Before any strategies or anything, you really have to control your own emotions. And number two, you have to adapt your trading strategy. The normal stuff you do is not going to work. For swings, almost on a daily basis, whether it's in my trade report account or I have a more aggressive account, I'm looking at earnings breakouts or different type of breakouts every single day. And that's kind of a bread and butter thing we do. And when this happens, that goes out the window. I haven't even been scanning for them right now because I know anything that breaks out is just going to get taken down with the market.
You short it almost.
There's some, yeah, and yeah, you can, especially on the day trading level like you're doing, you can short them. But you really have to adapt your style. You have to have, in this toolbox of setups we have, you should have a separate kind of setup here that's just related to sell-offs. So we're not doing any of these remounts or breakouts, any of that type of stuff. We're doing something specific to handling the volatile market and the sell-off, which we're gonna get into in a few minutes here.
It's so true.
It takes time. I've been through this many times. I actually got a few emails from people, saying, "Have you ever seen anything like this?" And no, you've been trading for a while. We've seen much worse than this.
Yeah.
There was after 9/11, there was Black Monday. There have been a ton of there every 2 or 3 years, and sometimes even faster. This happens. So once you get more experience, it gets easier to stay calm. But I think the biggest thing is experience. And even if you're not trading through this, put on some paper trades, learn from it. And then the next time this happens, and I guarantee you, even if we get into some amazing parabolic, continuation long setups, eventually this is going to happen again.
It's so true.
How about you, Kanal? How do you,
I mean,
what was your attitude going
this
into
stay
this
calm
when
thing
we
is
had this sell off?
the stay calm thing is huge because you know, right? Everybody has talent. You see it in sports, right? I mean, how many people you see flame up? But it's right whether you can summon your talent at will. I mean, that's really what makes a winner, right? Can you summon it
Yeah,
at will when you actually need it? When you actually need it when the lights are on, and that's a big thing. Part of it comes from repetitions and just having the practice. And then part of it comes from preparation, having the confidence to actually go out and do it because you're prepared. I mean, I have a ton of students. I've taught so many thousands of students. You've taught so many students. You have so many students that they just get the computer, they turn their computer on, and they just trade. And in this type of market, your preparation gives you the confidence, and that's what you need when the markets get really, really volatile. I had,
exactly.
I post my P&L in the chat room every day, when I leave for the day. And last week I had my best, week trading in like 18 months when the market was so volatile. And it was like, I get so many emails like, how'd you do that? And it was like, well, I didn't do anything. This was just a culmination of a decade's worth of preparation of
Exactly. And,
doing the
I'm
right
sure the
thing.
first time you went through this, you were getting the big losses, and that's what kind of separates the amateur from the professional, where you've been there many times, you know what to do. You're probably more patient with what you're doing. You're not getting
Mhm.
caught up with everything, where the amateur just starts over trading, making trade after trade, loss after loss.
You chase the
And actually,
bounce, and then you short the flush. You chase the bounce,
yeah,
you short the flush, and so
yeah,
you're always the
exactly.
opposite of what happens. In this market, it's a mean reversion market. So even when the market's flushing, you can't really short a breakdown. You can short the bounces into resistance, but you can't necessarily short a breakdown. And you
Exactly,
and you
yeah.
can't buy a breakout, but you could buy a rubber band setup. And I learned the rubber bands from you. So like if I long a market like this, it's only when I have a specific characteristics that say, like what is a setup? Well, a setup to me, from what I learned from Paul, is it's a list of conditions that must trigger before a trade is taken. So in my rule is like, when the market is under its major moving averages, like it's, now you've broken all your major moving averages. Well, the only way I'm taking something to the long side is if I have a rubber band setup. I have extreme oversold condition,
Yeah,
and then
we're gonna talk about that, and the
and
key
then
is
I go long.
extreme, and you said
Very
it right there.
extreme.
It's not oversold; it's extreme oversold. And the other thing we were talking about staying calm. For some reason on my camera here, it's reversed, but I've been getting people, calling me, talking to me, and my daughter keeps hearing me say, "Stay calm, stay calm," and I'm teaching her how to trade now. She's 11 years old, and
Yes.
she's going to be a trader. Yeah, she wants to be a trader, but she drew this little thing back here, and it's a mirror image there. But she wrote, "Stay calm, make good decisions," because she's heard me over the last 2 weeks just continually say that to people before we get into anything about how to
Mm-hmm.
deal with it, the setups. That's it right there. You have to stay calm. So that's kind of the overall thing. Just going into it, just get yourself calm. Know that you have to adapt your strategy. Specific to small accounts, I've been getting more questions from small account holders, this past 2 weeks than I have probably in the last 6 months. Uh, and the key for small account holders, especially if you're swinging, probably if you're day trading too, you cannot overtrade in this market. You can't really micromanage and watch these intraday moves, or you're going to be in and out of positions constantly, really going nowhere, and maybe even taking losses which could snowball. And on top of that, you're going to get commissions that are hitting you, and you're never going to be in that big move that you need to be in. And it's very hard to do. Small account holders are often, newer traders, and you're really excited. You just want to be making trades all the time. But you have to really be patient and not overtrade. I think that's the biggest key for a small account holder, and really for all accounts right now. But especially the small account holder, you cannot overtrade right now. You really have to stock the setups and just wait, be patient. If you don't make a trade in 2 or 3 days, that's fine. In the trade report account, we've made 3 trades over the last 2 weeks, and if we were going back and forth in continually trading, we'd be getting caught in these gap downs and have to get out. We'd be just basically churning, and you really have to pick your spots, especially for the small account holders. That's for everybody, but really the small account holders, you have to be patient and not micromanage, not get caught up in the intraday moves. You're going to hear a lot of day traders, going back and forth, and you really just can't get caught up in that.
Totally.
And another big thing between swing and day trading is understanding the time frames, because it is so volatile right now. If you're watching the market, you're seeing these big moves intraday, and I always tell people, when the market gaps down in the morning, that doesn't mean sell out now, because the trend is going to continue here. You really have to just watch the open and close. I forgot which day, all these days are kind of blending now. But there was a day where we gapped down in intraday. We started to recover, but we hadn't cleared the open yet. I got some people asking me, is the bounce in? And I told them, don't get caught up here. This is just intraday. It's really meaningless for a swing. We have to see the close. And a number of them got caught there because they thought that intraday, midday move was the bounce. And it probably was for you on a day trade basis. You probably, might have made a killing off that. But for a swing trader, you really have to focus on the open and close. That's the key for what we're looking at during this time. And then they got caught. It ended up, breaking down below that opening gap. And I forgot which day it was now, but it got hit really hard. So you really have to focus on the opens and the closes and watch those key levels of support and resistance.
So let's talk about that, the gaps, okay? Because I'll tell you, for example, so I trade this UVXY every day. So every day, when it gaps down, like the last couple of weeks, it always fills the gap. Like today, exactly. As soon as it gapped down, everybody's like, oh my God, like, because usually we're taught, like in bull markets, stock gaps up, we're trying to play it long, right? Stock gaps down, we're trying to short it, vice versa. That's just how things work. Like if it's an earnings play, for example. And UVXY gaps up and down like an earnings play, 5%, 10%. So, I treat it like an earnings breakup. But, in this market, you change it a little bit. Every time it gaps down, it fills a gap. And every time it gaps up, it comes back, and fills the gap most of the time. Not always. I mean, you still have to play the patterns and stuff like that. But like today, like that, for example, that's like kind of what happens. And so you've got to change things a little bit. And so a lot of people, they panic that first candle when they're looking. So like say you're holding a stock at $80 and it gaps down like $2 or whatever. Well, yeah, I mean, sadly, it's a decent sized gap now, but you have to take it into context of like where the market is. There's a lot of chance, like if you just wait 10 minutes, that it may come up and come back and fill that gap, and so how do you handle these type of gaps? Because usually it's like, most people just get stopped out. And I always tell my guys, they say, adjust your stop loss about 10 minutes before the market opens, because if it may gap up or down. You have to totally adjust it because, whatever you had as your stop loss the day before, you bought a stock in the 50-day moving average and you have a stop under it and the market gaps down a little bit, 15 minutes before the market, look at it, adjust it real quick because it may gap down a little bit and bounce. Like you have to.
Exactly. That
I
happened,
give it 10 minutes, basically.
That big day on Monday, that was exactly what we're doing. I sent an alert out to report members because we were holding Google and Amazon, and we still are. And the amateur trader, the retail trader, is going to get out at that point.
Yep.
And that's usually the worst spot to get out. Now, if you're, at work and you have to have that hard stop in, sometimes there's nothing you can do about it. I mean, you have to have a stop in. But if you're able to watch the market, you can pull your stop and just have a mental stop. And actually, in another slide, we're going to talk about this because this was a major issue. I'll pull it up here. Let's take a look at Google here. That's exactly when you get caught with a position. Was this the Monday? Yeah, this was the Monday here. So we were in Google here. We got in at 652. Actually ran up to 700, and my initial target was 700. I decided to stick with it and see if I could get a bigger trend coming. That didn't happen. Was caught in it. It gapped down here at around 600, and we knew a couple of things. One, we knew that, and we talked about this the day before when we saw, the China news, the futures were getting killed. We talked about staying calm, not panicking like everyone else and getting out. And that's what a lot of people did here. They got out, and that's when we got the bounce. So there were a couple of things. One was the gap down we were dealing with. The other is always pay attention to the old gaps that haven't filled. And we were gapping right down into it. So we had really strong support there. And that's what, during these sell-offs, you really want to be focusing on support. Basically, unfilled gaps and pivot lows and highs. We back in the day when we were going through the mentoring process, we used to really focus on moving averages. Moving averages don't seem to work as good as they used to. So now it seems like the gap is the new moving average, that new really strong support.
I think that has to do
more
a
on these
lot
unfilled
with
gaps than I do actually on moving averages now.
I think that has a lot to do with the program trading too. This is my gut feel, because I'm noticing that the technicals they actually work pretty clean these days on the indexes and stuff like that. But it seems like the gaps in the indices, unfulfilled gaps, are always targets before things roll over.
Slam dunks as targets or as buy points for entries also.
The programs are targeting all of this, and so these gaps now become like these huge areas that we have to focus on.
Yeah, and then with the moving averages, which we used to, the slam dunk, it's now becoming gap fills. It used to be moving averages. And now, I think they figured out that we've all got our stops under there, so there's some stock gunning that will go on, and then you get the remount. And that's why we play remount so much now. Rather than buying on that test of the 50-day, we watch for the violation and then the remount, because there's so much stop gunning going on that you don't want to get caught in that. And that's one thing as traders, we're always adjusting. That strategy you used 4 or 5 years ago is probably not going to work now because it's been figured out, and there's little tweaks to it. So we still use 50-day moving averages, but we're using it in a different way now. But going back to this Google trade, so there was the big gap down on this Monday, a lot of panic, and we didn't panic. We stayed calm, and we knew, we were coming into this gap fill here. There could be an overreaction. So what I do is, I watch the gap. Now I'm going to see if that level holds. So we held on, it pulled back a little bit. There was a point there where you have to get out, but we're not going to get out on that initial gap down. So basically you're waiting for a half hour, you're waiting for an hour to see what happens. How does it handle that gap? Now, if there's continued selling, or if it bounces a little and then violates that opening, that opening low, then you just have to get out. And luckily we didn't have to do that. We played the gap down, and it's bounced since. We actually recovered up here. Actually, we're back up in the positive pretty quickly. The entry was 652. I think it got up to here, almost 672. Now it's pulled back a little, and that's fine. Nothing's going to go up in a straight line. Now, we'll see if the 50-day holds. Maybe there'll be a little violation and pull up. But things are looking a lot better for Google now. So that's so. If you would have done what a lot of people did here, where they just stop themselves out, we would be completely out of this trade, and at the least now we can get out at a better price than we would have on that Monday. And the other position we were in, same thing, Amazon, where there was a big gap down. We had the support level here going back to the earnings breakout last quarter. So we were using that kind of
that flag.
Yeah, and so we knew that was could be a support level, and it came right back to that support level. So that's one of those keys you have to do during these sell-offs. You really have to mark where the support levels are in, and we're talking about pivot highs, pivot lows, gaps in, during these sell-offs. I think you should be focusing on that more than anything. And that's what Amazon did on that Monday, went straight to that support level and bounced right from there. So again, if we had panicked and just got out because we were scared and our stop had been violated, that's another thing. One of my cardinal rules is stick with your stops. Every rule, can be violated, and this is one of those situations where you violate that rule. When there's the gap down, watch for that open, and if it continues to drop again, you have to get out. But watch to see if it stabilizes, and Amazon did stabilize, and we got that recovery, and now we're back to what looks like a decent setup here.
Hey, Paul, so how much room, because obviously, like, say a stock like Amazon, like I shorted Amazon today for just a quick day trade. This fucker moves so fast. So I shorted like 503.70. And it popped up like 50 cents, and then it went down to like 4.99. And I was like, oh man, I'm up like $1,000 on it. And I went to go do something, and I put a stop in. And next thing you know, it's at 508 or whatever. I mean,
you were in a day trade and you went to do something?
I mean, yeah, I use a stop. I was already up like $4,000.
Okay, all right.
I always get a little bit more sloppy when I'm up. I want to go hit the gym. But
yeah. My kids they probably have the most tardies than any other kids, because if I'm in the middle of a day trade, they're late for school. I cannot pull myself from the screen. They can miss something.
It's hard.
It's hard. All right. What were you saying now?
But so like Amazon, because I never trade Amazon, mostly because the float's too big for me on a day trade basis.
Yeah, exactly. 380. Yeah.
In volatile markets, the higher float stocks actually, you can get away with it. Like, so Netflix and Amazon, I never trade them. Like, since Amazon or Netflix did the split, now the float's in the hundreds of millions.
That split killed the stock. Same with Facebook, Netflix.
Yeah.
But
the split sucked. Now that Netflix is a $100 stock, I mean, it's more affordable to play. Not that it matters, but I would never play it because the float's like, it went from 50 to like 300 million. But when the market's volatile, then you can play a 300 million share float stock and you'll still get 10% range. And so now for the next 2 weeks, basically Amazon and Netflix and these type of stocks are on my list
and these are the exact stocks that are on our swing list. When I was talking about narrowing down, where we normally trade the low floats, a lot of the stocks, until they until they break out, no one's ever heard of. But in this market, we've really narrowed it down to these, because exactly what you said. These are everyone's kind of running to these stocks to trade now, and you do get the volatility here.
You get the volatility, and they actually react to technicals pretty well. A lot of people get really worried about program trading, but there's the other side of program trading is that they actually react. If you could figure out which technicals they're reacting to, certain stocks use certain moving averages, certain EMAs, or gaps, or patterns, or bases. Every stock has a story, and there's certain stocks that just have very easy linear patterns. Like, I find Netflix really easy to play the last couple of weeks. Like, I've made tons of money on it. I've never traded it before, but it reacts really well to technicals.
For day trading, Netflix has been my go-to the last 2 weeks.
Very easy for technicals. Double bottoms, double tops, like classic setups.
We talked about the extremes. Anytime it's gotten completely oversold, it's been time to buy. Anytime it's been completely overbought, it's been a slam dunk short.
Yeah, it's easy.
It's been great intraday. What were we talking about here? Was it the gaps?
So like this this gap. So this Amazon trade. So I had trouble with managing my stop loss today because first of all, I never trade $500 stocks, and I never trade Amazon, and I never trade 400 million share float stocks. So this is like, I think, my second trade on Amazon since it was at $4. The last time I traded Amazon was when it was at $4. So like, how do you, like, when it's gap filling like this, like, 450 is basically the support, but also this stock has this monumental range. Each candle on Amazon, like when I was trading today, is like $1. Like, how do you set your stop? Like, how much room do you give
Well, I'll tell you,
beyond
so
where it needs to be?
originally I was in up here, I think it was around 520. So we're still a little bit of ways away from the entry, and my stop was between 512 and 515. I was basically playing this earnings breakout, although this was an ugly candle here on the breakout. We still had a huge pop here, and we were playing the bottom of this range. So right around 510 was the stop. So that's how I was originally playing it. Um, that kind of goes out the window when this happens and you make a choice. Either you're going to get out, but I decided to play the sell-off. I had a feeling it would bounce back, and it did. And I made peace with the fact with the idea that what I'm trying to do might not work, and I'm going to take a bigger loss than normal. Uh,
Always
so
a
I
gift.
had to make the decision that in this instance, I'd be willing to do that. Now the question is, once it has recovered, and it actually got, whereas Google actually got back into the profit level, Amazon got back to my initial stop. So, once it got back to 515, I was looking at my normal 1 hour risk, so a very small loss. And I had to make the decision here, am I going to get out or am I going to stick with it? Now, technically, everything looks pretty good here. It took that hard sell-off, and it's come back and it's holding its 50-day. And what we're going to talk about later is relative strength stocks. What I'm
Looks hot
thinking
today.
about with Amazon here, whether I'm going to stick with it or pull out, is the fact that it's above its 50-day, which is the exact opposite of SPY here. SPY is way below its 50-day. So we're looking for these relative strength stocks, and Amazon is one of them. The fact that it's above while SPY is way below makes it a relative strength stock. And now I have to think about, where am I going to adjust my stop? Am I going to take it all the way down here to 450 and risk a big loss again? Or do I maybe place it under the 50-day? What I would not do, I know everyone's looking at the 50-day now. A lot of members who are still in it are thinking, okay, I'll move the stop up to the 50-day. Whoever it is that does all this, they know that. And
Yep.
so I would be very wary of placing my stop. Are you in a swing or a day trade?
Well, I day trade today for a hot second.
You day traded today, but okay, so you're not swinging this.
No, no, no. I
Okay,
was
well,
a
if
day.
you were in a swing right now, I would be very careful about putting it at the 50-day moving average. I would put it a little below to give it some room because it may test here. Some stop gunning may go on.
And
So if you're
that's
in
what I want to know.
or if you're
How much
thinking about
range?
entering there because you see the remount, the retest, and now you're thinking, okay, it can pop here. Wherever I enter here, I would I would give myself a room. So you may have to position size a little smaller here so you don't risk too much.
Yep.
Go a little smaller and place your risk below the 50-day where you can, hold on through some of the volatility here and not get stopped out of what ultimately might be a good position.
So would you give it like a day's range, essentially, below the 50 day?
Yeah, so just eyeballing it here, you know how much it can move here, maybe 10 points. So if the 50 days here at 492, I'd probably be down here somewhere around, this
Okay.
isn't exact, but
And
maybe
that's,
around 482.
I think that's where people have a lot of trouble too. Is like everybody wants to have tight stops. I
Oh
look at all
yeah,
my students' trades all the time, and they're like, I'm managing my risk. I go, good. You are going to be the poorest, best risk manager in history of man.
yeah,
You're a great
and
risk manager, and you're going to be so poor because
yeah,
you get
and the thing
stopped
is,
out of everything.
you can be a great stock picker in terms of picking the right setup. And you can also be good at managing your risk in the sense that you're never taking, more than say a 1% loss, 2% loss, 0.5, whatever your risk parameter is. But you need to know, and this is part of trade management. I always say there's three parts. Each one is equal. One is picking the stocks, but 66% of it is risk management, but also, and this is what people don't really focus on, is trade management. So that means where you're placing your stops, where are you placing your targets. So I get it all the time with Trade Report members who they'll say, I'm getting in the same stocks as you are. Why are you up 15, 20% and I'm down? We're trading the same stocks. It's because most of the time, if you just look at what they're doing, it stops the position size that is too big and stops that are too tight. So they might be managing that risk at 1% like they should, but they're managing their stop, they're managing their risk where they should, but the stop is too tight. They get stopped out because of the natural volatility, and then the stock will move exactly the way they wanted it to, but they've been stopped out.
I challenge
So
my students all the time. Like when I do the boot camps, I challenge my students all the time because they always have their own theories. I say, I'll give you a bet. I will give you the entries, and we can all take the same entries, and I will triple your returns.
yeah, it's all about trade management. I think that's one of the things that people don't focus on. I think more than anything, traders focuses on the
Win
setup,
ratio,
yeah,
setup, all
the
this stuff.
setup, the stock picking, and really, I think if you can master trade management and risk management, you can trade just about any stock and win if you're doing those two things. You could almost use a dartboard and just properly master those two things, and you'll be a winning trader. And then if you're a good stock picker on top of that,
And
that's
you're a
where
superstar.
really make it, yeah, make the big money.
I tell my guys all the time, any stock, I will double your gains just by position size, knowing when to go big, when to go small, because most traders, I'm noticing, they either buy 100 shares, 500 shares, 1,000, whatever their account size is. They just buy static. They're
Uh,
not they're not basing their position size on either probability or risk. They just go one. I'm a
yeah, they
100
might
share guy,
always take
200 share guy.
they're always going to take 100 shares and then place the stop according to that, where you really have to look at the support levels, on the chart.
You've got to take the whole case. You got to take the whole case. As traders, I mean, we're essentially just like you, Paul. I mean, Paul was a lawyer back in the day. I mean, you're building a case. Like when you're looking at a stock, you're building a case. And a trade that you take has to be, you have to prove above and beyond a reasonable doubt that this stock is worth your money. Meaning that it has to be the right setup, but the entry has to be at the right spot where your risk is managed and your reward is high. And then your position size has to be just perfect. If you go
Exactly.
100 shares when you need 1,000, even if you made money on the trade, it's a loss because you didn't
Yeah,
go as big as you needed to go.
exactly. So, okay, so we're getting back to, we were talking about time frames. As a swing trader, you can't get caught up with the intraday too much. During this time, it pays for support levels to watch some of the major intraday pivots, where they've, bounced from and pulled back from. But just don't get caught up in, okay, the bounce is in here because the intraday is moving. You really have to focus on the open and close. Number four, if you don't know what you're doing, you feel like you're stressed out, or you just don't, getting too manic, just stay in cash. The money you don't lose is like making money, because you would have taken a loss. Your account would be, say, if you have a 50,000 account, you would be at 45 and now you're still at 50. And you're beating the market. If the market is selling off and you're at a level, where you were before, you've actually beat the market. So don't be afraid to just say, you know what, I'm going to wait for things to turn around, for it to get back to what I know how to do, and just stay in cash, or just wait for that pivotal moment. Just keep stalking the market, wait for that moment, where it gets so extreme, so oversold that you can enter. And a lot of people don't want to do that, but sometimes it is best to just stay out of the market.
And a good thing to do during these times, I think, a lot of people don't realize, like, just because you're in cash doesn't mean you're not working. Like when I tell people like, hey, I'm just in cash or I'm sitting the day out, it doesn't mean I'm not working. What I'm doing is I'm building a wish list. Like, we have our focus list and our watch list. What if the market just crashes into this all-time amazing place? Like, rather than scrambling when it starts to bounce, during the times you can make this amazing wish list of stocks that
Exactly.
you're ready for when the market does what you need it to do. And rather than being reactive and searching for what you need to do, you're already ready. And the thing is, like, you could sit out 10 days, and if the market bounces amazingly, you can make a month's worth of gains in 2 days. Like you don't have to
Yeah,
be doing anything. Two
exactly.
days could make a month.
Let's say SPY here. I've got the SPY chart up, and if this isn't the best time to trade for you, sit out, wait, but have the probabilities in play. Say to yourself, you know what? If it comes back down and breaks this October 2014 low, I know I can short here because the market is just going to sell off. And I'm ready. If we clear, say, this 200 high here, that's when the bounce is going to be in and I can get long. So sometimes you just have to be patient. You're right. It doesn't mean you're doing nothing. You're going over every probability, everything you can do. So when things align, you're ready for it. All right, now let's get to rather than these overall, type things. Let's talk about specifics of what we're doing during the sell-off. Now, normally I've got, a watch list of anywhere between 100 to 200 stocks that I look at on a daily basis. From there, I narrow it down to a focus list of usually 50 to 60 stocks. And from there, for the next day of trading, even more focused list of maybe anywhere between 5 and 20 stocks.
A double
So
focus.
so that's normally, and it sounds like a lot, but we've still narrowed it down from the thousands of stocks there are, and that's very easily manageable. But even that during a sell-off like this is too much. One of the first reason is everything's moving with the market. It doesn't matter if it's a fantastic stock that just had blowout earnings like Google. Or another stock. Most of the move is going to be with the market, so you're really getting no edge, and we're always looking for an edge. Doing 5 hours of research, finding all these stocks is really going to do nothing for you because they're just moving with the market. So the easiest thing and the best thing to do is to focus on the leveraged ETFs, like you were talking about with oil. You're keying in on that triple leveraged ETF. There's no need for you to go study oil stocks, all these specific oil stocks. None of them, or very few of them, and probably you won't be in that one, but very few are actually going to beat that triple leveraged ETF.
And the liquidity will suck in a lot of them. I mean,
yeah. So
awesome,
there's really no
one,
need to get this big watch list. Yeah. So if you like oil, just be focused on that oil ETF. Don't be focused on every oil stock you can think of that looks good. And it really helps you focus on what you need to be looking at, these key support levels, wherever the gap downs are, how the stock's been moving. If you're looking at 20 different oil stocks, it's going to be tougher to make these decisions. So that's part of it. You get into overanalysis, poor decision making, stress, and that's not good for trading. So really narrow it down, go with the leveraged ETFs, and then the relative strength stocks that people are moving towards. And I think that should be the next thing on the list here. 6 relative strength stocks. So you're going to key in on the stocks that are beating the indexes, so beating SPY. We talked about it here. Now we've got a list right now in the trade report where we're looking at Google. Now again, well, let's look at SPY. We talked about this before. SPY here is below its 50 and 200-day moving averages, has gotten crushed. So what's beating SPY right now? And it's these big names that we might not trade normally. Google. I mean, if we didn't know there was that huge crash, we probably wouldn't know what's going on in the overall market because Google looks pretty good. This really just looks like some type of retest of this 50-day in the gap here. So Google is one of them. Under Armour, it got hit hard, but now it never did go below its 200-day, which SPY did, and it's remounted its 50-day moving average. So it's looking really good, and on top of that,
double retested,
it's near its all-time high, which very few stocks are. And then also, it had a strong earnings breakout, so it still has that catalyst. It's still looked upon favorably.
Hey, Paul,
so this is a stock we're focusing on here.
So say you're doing in this market or any market, do you hit this Under Armour? Because I was looking at this in my IRA. Do you hit this thing on the original remount of the 50-day, or like this double test, right? So it remounted, it popped up at like $5-6 more, but then it pulled right back to the 50-day and basically gave it confirmation that this 50-day is holding. Like usually a 50-day is just a
Yeah,
50-day now
exactly.
moving
No,
averages break, but this gave us confirmation like, holy shit, like it
this is
remounted
this is
and
this
pulled
is
back.
strong here, right? So I'm actually stocking this right now for a good entry. I almost went
Me
into
too.
it today, but I was a little concerned, and we're always thinking big picture here, and I was a little concerned here that SPY is going to break down. So I didn't enter it quite yet, but this is at the forefront of my list for an entry. But exactly, when you get that remount and then you get a retest that holds, that's often a great place here. And now let's talk about risk. We haven't talked about risk that much specifically, but let's just say the old high is our target, and we're very close to it here, but it's up here a little above 100. So let's say it pulls back in, we can get an entry, say at 93. Now the old high here is about 101, so we're looking at about 7 or 8 points, just if our target is only the old high. But I think now, if the market did bounce, this is one of those pre-breakout plays we could do where we enter here and actually play through the breakout rather than just going for the old high as our target.
Because there's
But
room in the
anyway,
market, right? I mean,
yeah,
this,
so if it was an 8, say we've got 8 points here, now at 93, we can easily place our stop here below and give ourselves enough room, and say we go all the way to the gap fill just in case it went to the gap, we're risking here about 2.5 to 3 points to gain 8 here. So we're getting 2.5 to 3 on our reward to risk, which is fantastic. With that, you only need to be right, 40% of the time to make a killing over time. So that's what we're thinking about in terms of risk. And then here, my target would actually be much higher because I do think if the market does bounce here, this is going to easily break through its old high. So we're talking about a reward to risk here that's going to be 5 to 1 or 6 to 1 if we play it that way. So Google,
and
Under
Paul,
Armour.
let me ask you something on
Yeah.
something like this. So, I mean, I know I can do this. You know you can do this. But so when we take a trade like this, and you say,
Yeah.
we say, I tell my students this all the time. You tell your students this all the time. You told me a million times. We say, okay, we have a potential 6 to 1 target. But
Uh-huh.
the guys, when they see a dollar, they want to take it because they're green, right?
Yeah.
What are
Yeah.
some of the best ways to actually sit there and hold for the real gain, which is the only way you can survive
Yeah. It's
statistically.
tough. We've all been
Statistically, you
through
can't
it,
do
but
it
yeah.
if
You know,
unless
you
you
know,
hold for the gain.
Yeah, and we've all been through it where you get these small gains and you want to take it, or even if you think this can go 6 to 1, once it hits 2 to 1, you feel like getting out.
You
But
do.
sometimes you've got to get these big gains, and these big gains can move your year. And sometimes it is going to happen where you give it up and you end up taking a small loss when you had 2 to 1. But over time, if you can get some of these 6 to 1, 7 ones, it's really going to ramp up your profits. So it's tough, and you heard me. I told you this a million times. I tell everybody this: set it and forget it. Very hard to do, but as a swing trader, especially if you have a job and you're trading on the side, just get into your other things, whatever you're doing. Get into your work. That position's there. You've got your stop set. You've got your target in, and you really do have to just maybe just look at it, 1 or 2 times a day, and that's it, and really fight. It's more just fighting your own head, and everyone has a different way of doing it. Mine has basically come through experience, just having this happen to me so many times that I know, if I stick with it, I'm gonna get these kind of profits.
And Paul, just to add on that, I think it's a misnomer. I think sometimes we give swing trading the short change by saying it's just for people with jobs and you just need to watch it 2, 3 times a day. I think a lot of who becomes a swing trader beyond just your work situation can be, even if you have an easy work situation where you can be at the computer all the time, is a personality. That some people are not suited for making 50 trades a day. Like some people are suited for actually going for the big gains because from what I've noticed, like from just working with you and other swing traders, guys, there's no difference in how much money you make as a day trader versus swing trader. The difference comes from how good you are at what you do. So a good swing trader will make money. A good day trader will make money. A bad trader will lose money. And we always think like, okay, a swing trader has to be somebody that has a job and is really busy, but that's not necessarily the case because like we trade momentum stocks, whether it's a swing trade or day trade basis. And so you're catching big gains that can be a full-time living as Paul is not a professional day trader. He's a professional trader, and he's trading swings. But a lot of it has to do with personality. Some of you guys will go through programs and chat rooms and different things, and you may suck at day trading. But there's a good shot that it just happens to be when the action is really tight and you're trading penny by penny and thousands of shares, it's easy to shake yourself in and out of things. But I've had a lot of students that were like shitty day traders become good swing traders, and you can make
Exactly.
the same money.
It's vice versa. It really depends on your personality, and some people can do both. I've transitioned into doing both, and now I'd never give up either one. Even if I'm day trading more, I know potentially I can make bigger gains swing trading. If you catch a move during this sell-off, you see examples of it. Some of these 100 millionaires or billionaires, they did this. They caught these big moves, and you could never make that day trading. But also, it's good to even if you are day trading, sometimes your day trading is not going to be going well, and it's almost an alternate stream of income. Sometimes your swing trading is going to be fantastic, and your day trading is not going to be good. And sometimes your day trading will be great because the market's more suited for that, and your swing trading won't be as great. So it's good to be set up for both types of markets and what the market is giving you, whether it's swing or
the personality is key. I got a couple students. I had 2 students that were just on simulators. Technique-wise, maybe some of the best day traders I've ever seen. They knew the techniques better than I did. But when it came down to it, trading live, it just didn't suit their personality. They're working, they're getting married, they got stuff going on, and this type of stuff is stressful, the penny by penny type of movement. And I heard from both of them, Phil Nava, Justin Mantelli. They're like, dude, I've been working with Paul doing swing trades.
Phil, yeah.
Phil and Justin are like 2 of my favorite students. So like, I don't know if I've talked to you about it. They're like near and dear close to me, like little brothers. Like they're like my.
Oh really? Oh okay. Yeah, I meet with Phil every week.
Yeah, they're my guys. So Phil, to this day, because I'm his teacher, he came through my 60-day boot camp. He's a lot of stuff I do, which is a lot of stuff that Paul taught me. He sends me a text every Friday of his results. And, he wasn't that good of a day trader. He's a teacher. I mean, obviously a teacher, he's got shit going on, but also it just didn't suit his lifestyle, his personality at the time. And he's done great as a swing trader. And it's not the results and the money it doesn't matter. Because if you're good at something, you're going to make money. There's no one thing that makes more money than another. It's about skill set and just being awesome at it. And it's awesome to see, like Justin Mantelli sent me a text. He's like, dude, like I've been trading off my smartphone. He's like, dude, day trading just stressed me out. He's like, it just wasn't for me. He's like, I was getting married and I was doing all this stuff. And he's like, dude, I grew my account from 4,000 to 18,000 swing trading. I'm like, whoa, that's like day trading type of results. It's hard to do that swing trading. And it was just because he found something that suits his personality. And so, he's been working with Paul in the swing trade service, and it clicked for him. Like, okay,
that's great. I didn't know about Justin, but with Phil, the interesting thing about him, he's been killing it on the swing, but he was saying that focusing on swing has really helped his day trading.
Yeah.
And we talked about this earlier today, and now his day trading has turned around too. I think you get to that slower swing and everything kind of comes together, and then you move and put those concepts into your day trading, and sometimes it actually improves your day trading as well.
It was awesome to see the text from him. Like he's a fairly small account. He trades a little bit more volatile stuff than you, And
Uh,
he's like, I made $500 in this, $600 there. He sends me his logs. I'm like, I mean, that's like a great percentage. He was taking day trading returns of swing trade. It's just because he found something that calmed him down a little bit, and so he's taking 5 trades a week versus 100, and he really started hitting his groove. And I thought that was really awesome that we sometimes just label people as swing traders, day traders based on their jobs, but so much of it has to do with your aptitude of speed and personality and so much of that stuff. I mean, Paul taught me $1 million skill, but I didn't stay as a swing trader, even though I use it, because I just had an aptitude for something else. But I took all the
exactly.
principles.
And these major concepts apply to either. And I tell the people I mentor and trade report members, we're showing you how to do something, but that doesn't mean you have to do it exactly the way we do. What I do fits me. But if you can tweak it to your personality, that's going to be better for you. If you're a swing trader and you have problems micromanaging positions, then go with make your swing trading more aggressive instead of the 2-week hold. Maybe look for setups that you only hold for 2-3 days, or transition into day trading if you know you can't stop yourself from micromanaging these positions. Same thing with day trading. If you have some of these issues that swing trading might suit you, you can transition towards that.
So I started off as a day trader when I was 18, and then I met Paul, and so
Oh,
I
so
went into
you were day trading before. I didn't know you were day trading before we got together.
Well, so what was happening was I was so I didn't know about so before I met you, I didn't know really about intraday charts. I was day trading based off daily charts because nobody taught me anything. So you see a daily chart and you see a breakout, right? So you buy it at, say the breakout is at 105. So you buy it at 105 based on the daily chart, but there's all these things going on intraday that sometimes make breakouts fail. And so all my breakouts would fail because I didn't even know about, I never heard about aligning on multiple time frames. And I never, that's, a lot of that's necessary for day trading. You have a good swing trade setup, and then you have a good day trade setup that matches that, right? You're going with the trend, I didn't know about any of that. And so I wasn't trying to be a day trader back in the day. It just happened to be that, I'd see some of the daily, I'd buy and sell because I was awful. But, you never know what you're going to end up till you start trying some things. But the concepts are always the same. It's about reward to risk management, and, the rest of it, you can make it work. The patterns are all the same.
Yeah, you got to see, what fits you. Getting back to this, so there was UA, CMG, another relative strength stock here. This one never even violated its 50-day or 200-day moving average. This was an earnings breakout. That's another thing. A lot of these relative strength stocks we're watching came from our earnings breakout list. So every quarter, every earnings season, we're building lists of earnings breakouts. And we don't just stop following it, that 1 or 2 weeks after the breakout. Sometimes these setups actually come into place a quarter or two later. So with CMG here, that's what happened. We had the earnings breakout. It's pulled back. Again, this is one of those stocks, and when you're looking for relative strength stocks, if I was looking at CMG's chart, would I have any idea the market sold off the way it did?
Dude, how hot is this one? It didn't even break the 50-day.
Yeah, it did not break the 50-day. This looks like a natural pullback to its 50-day. It doesn't look like a huge market sell-off. And bounced, you talked about the retest. It's retested and bounces again. Very close to its all-time high now. Only 25 $750 stock. Speaking of $750 stock, small account holders should not be afraid to trade a $700 stock.
Take 25 shares. It's not even a big deal.
On the percentage. Yeah, you're focusing on the percentage gain. If I can get a 10% move in a $700 stock, and I'm only going to get a 5% move in a $5 stock, I'm going to go with the bigger stock. So don't be afraid just because you can't get as many shares. You can actually make as much or more money with the bigger stock. But anyway, CMG, another fantastic relative strength stock, so we're watching this very closely. And all of these are close to their highs. If they eventually do I'm going to play these for pre-breakouts, and then actually, and I don't do a lot of this, but if they do break out from their highs here, I might even add to the positions rather than take off here.
Hey, Paul, so let me ask
So
you,
those are,
how do you answer this? A majority of the emails I get from people with small accounts, they always
Mhm.
ask me for hot penny stock picks. They're like, hey, I've got a small account, so I need some penny stocks that I can trade. I say, well, you might as well just send me the money. But like, I mean,
yeah, yeah.
what would you tell somebody like, all right, you got
I would just
five
say
thousand bucks.
I personally know I've seen on the internet people, and I don't know how verified it is, who are killing it on penny stocks, but I personally don't know any successful penny stock traders. That's just me personally.
I've never seen anybody long
I've
them. I've seen some people
yeah,
short them if you can do it, but
maybe there's a few good ones and they're outliers, but generally you're not going. I can find plenty of swing traders. I can find plenty of day traders who are killing it. But penny stocks, I just don't know any. So that's what I would say. I've
well,
never done it.
and it's just cheap stocks in general, right? You get the small account guys, and they want to trade $5 stock, and I always tell them this: I go, dude, a $5 stock is going to go up 10 cents or down 10 cents. So there's
But
no
yeah,
money there. But like
yeah,
a bigger stock, it could go up $10 up or down, and even if you have 25 shares, you can make money. There's
yeah,
money
yeah.
in that.
And I mean, with five, there are some breakout strategies with $5 stocks. I thought you were talking about like the 50-cent stocks and the dollar stocks, but
Well, I just think
um,
that in general, people just gravitate towards the lower price stocks when they have a smaller account, when that's not
yeah.
necessarily the ideal situation. It's about movement.
The other thing for these smaller stocks with not a lot of volume, there's often really wide bid and ask spreads,
It's
and
awful.
yeah, for a small account holder, you're just going to get crushed. I mean, you're basically you're fighting so many things, and then you're fighting these spreads that are so big. It makes it very challenging to win. So getting back here, so we're looking for relative strength stocks, and we pointed out a few that we're watching. And really, you don't want to focus on too many of these. Just keep it simple, the best ones. And again, right now it's Google, UA, CMG, Buffalo Wild Wings, and a few others. Now 7, focus on key support levels, and we've talked about
Hey,
this a
Paul,
lot already.
can I ring you back on one thing? I've noticed quite a few people asking. The
Sure.
software you use, like so that you're using the relative strength and doing your scans on, what is that? And just if you can give a 30-second overview of how you use it.
Okay. Well, there's Telechart here. I trade off interactive brokers, and I use Telechart for all my swing stuff here. There's a number of scans you can use, and honestly, I haven't had to really scan anything because I've got, when you're trading, when you've been trading, and I get this question all the time about scans. But when I'm building, you're building this focus list, this watch list that's kind of organic. It's continually building. Things are going in and out. So really, all I've had to do is go through my focus list, and that mostly comes from one, sector analysis, the weekly sector analysis I do, going over which sectors are doing good. We went over this years back. Focus in on those sectors that are moving, and then find the best stocks in those sectors. And then from there, stocks that were earnings breakouts, and a few other things. So there are scans there that you can run. You can just simply pull up, say, IWM, and just look at the last week in IWM, which stocks have done the best, and there you've got your relative strength stocks.
That's it.
Otherwise, if you've got that focus list of good stocks that have developed, that's all you really need to do, and the Googles and some of these other stocks should have shown up on it.
So, Paul, I mean, I have a static answer that I tell everybody when they ask me about this, but I find that for new traders, the number one question I get asked is, what scans do you run? Like that's the secret sauce.
Yeah, and it's
And
not. Yeah.
I always tell people, it's like, okay, just because you have a scalpel doesn't mean you can do
Yeah.
surgery. Like, just because you've been given the tool doesn't mean you know what to do with it. Like,
And
I
even,
can give you the 10 best stocks in the history of the world, and 99% of people will lose money on them because it's not about the best stocks in the world. It's about where you enter them and where you manage your risk and what you can get out of them. And so, like in my boot camp, I just use the same scans that you gave me for day
Mhm.
trading too. Like it's like because all we're looking for is movement. Stocks that pull back to support levels, and then like for me, like I do the 4% breakout scan every day, and I have
Oh
a
yeah.
go-to. I have a go-to list of 200 stocks basically that are trending, that have the volume parameters that I would need. That just move basically that we watch, well-known stocks essentially, and then I scan for earnings breakouts, and that's it. Like it's
Yeah, that's what I do too. I've got a few more scans here and there depending on the market, but overall,
if
the
it's
other thing, if you
volatility,
get
yeah,
these
rubber bands, that's it.
if you get these really tight scans where you've got all the parameters in there, one, you're going to miss some really good stocks. Two, you're not going to develop the feel for the market,
Ever.
and that's really important. This sell-off here, while we weren't predicting a sell-off like we had, the 2 weeks going into the sell-off, I had already gotten uh, a lot less aggressive, more conservative, and we were talking about this report in the report almost every day. We had already slowed down because we had developed this feel just by watching the sectors that were moving. Not as many were moving. Um,
Distribution everywhere.
every, Everything had gotten even though we were at highs, it was becoming a really narrow market. And if you're just doing these scans that pick up stocks, you're not really going to get that feel. So now I basically, all the stocks that make my focus list come from sector analysis or the breakout. And the other thing with you were talking about the 4% breakouts and the earnings breakouts. Oftentimes I'll give someone that scan and they'll say, okay, how do I narrow it down even more? And you don't want to narrow it down
Why
more. You
would you
want
want
to be
to?
able to see all these different things happening when you're looking through. And it doesn't take long
Yeah.
to jump through 20 or 30 stocks. So
Paul, people
it's not like you're saving a ton of time by having a scan.
people ask me all the time, like, can I get a flag breakout scan? I say, I don't have one. And they're like, why? And
Yeah,
I go, because if I have a flag breakout scan, I'm only going to find flag patterns. Like, I'm a
yeah,
trader. I have I was taught a toolbox of setups of remounts, pullbacks, flags, flat tops. So I don't want to scan for one pattern. I want to know what's moving and what's working, and then I will filter myself through those stocks and label which patterns are playable.
exactly. So with
Why
that
limit
earnings
it?
breakout scan, so if you would use that flag pattern, you were going to see the flag pattern. But maybe, SPY might be, at put in a inverted hammer or something. So a lot of them are going to fail. So all you're seeing is the flag breakout, whereas if you had the bigger scan, you're going to end up seeing maybe the earnings breakouts that while it was still a 4% move, it was once in the day at 8%, and now it's formed a tail too, and you can short it because that's the way the market is going. So you're going to miss a lot of that if you have these very specific scans. Um, yeah, okay. So now we're going to focus on key support levels. So these stocks that we're keyed in on, which are very few, the indexes and a few sectors that we're watching. We're going to focus in on the key support levels, and I'm going to pull up SPY here. We already mentioned Google when we handled that gap down. We were watching this gap fill here at right around 600. So we already knew the support level was in play. So you want to find these major support levels. And right now it would be the 50-day and the highs here around 700. Now with SPY, the first thing we did during this sell-off was go back to October 2014. And we talked about it the day before when we knew the sell-off was going to be in play the next day. Watch the October 2014 low. And you can see here exactly what happened. It bounced exactly to that line, exactly, and it went exactly to that line, bounced intraday, and then for a swing continued to bounce here. So watch these key previous pivot levels, and that October 14th low was the pivot level. The other thing you're going to do is watch for any gaps that develop. And try to play these as your targets or entries for bounce plays. So here, when we played UPRO, uh, I'll switch over to UPRO, which is the triple leveraged ETF for SPY. You know, we watched this bounce, tested the October 2014 low. Actually, in my more aggressive account, I traded it from there. But in the trade report account, we wanted to see a little more stability. So we waited and watched. And actually, on this day where we entered the trade, which was Wednesday, we actually did look at the intraday chart, which I normally don't pay much attention to for swings. But this is an adjustment we made during the sell-off. We were looking for some stability intraday too, and we found that. Entered at 51.61 here, and now where, the question I was getting is where is the target? And we had a very clear target here at the gap fill. So you're keying in on these gap fills, these open gaps that you're trying to fill. So with UPRO here, we entered and our target was the gap fill. We got out right at it. One exit was it was a partial exit. One was at 57 something, and then the final was at 58.42. But we basically used that initial gap fill or open gap as our target, and that's pretty much where it pulled back. It tried to get up past it a little bit by, maybe 30 or 40 cents here, which is insignificant for a swing like this. Then pulled back, right at that gap fill. So you really want to pay attention to these levels here. So next time, once we clear this gap, your next target is going to be up here at this gap fill. And it's amazing how good, I don't know what the rate is for these gap rates, but they seem to be slam dunks, both as entries and targets.
They are. I mean, I've done a little bit of analysis on this when I'm doing my IRA trading, because I was picking all the wrong targets, and I was using moving averages, and I was just a little bit off. Not a lot off, but just enough where it makes you go, And everything I saw was the programs, because it's a very algorithmic environment, especially when the market gets a little bit like this. They push you to the ranges. They're using the technicals. They're pushing you right to the gap and then back. It's literally they're using these gaps, the programs, for buy levels and sell levels.
And targets.
Unfilled gaps are those are your targets. They're coming back and filling them, and it's been happening for about a whole year, a little bit longer.
They're the new moving averages. The way we used to do moving averages, back 7 or 8 years ago, that's what the gap fill. That's what these open gaps are now. So when you see a sell-off like this and you see gap after gap after gap, you need to keep that in mind and notate and have written down exactly where these gap levels are, especially the ones that aren't filled yet. So now here with SPY, let's get back to SPY here, or we can use UPRO. So now we've got an unfilled gap here, and the key now is, do we clear this open gap here? If it tests here and pulls back, we could get a retest here of the October 2014 lows, and I'm actually playing for that to happen. Now, I got asked, is that what you think is going to happen? And the answer is no. I don't know if that's going to happen, but I'm managing my risk, and I want to be positioned well if it does happen. And also, we got this breakdown here. So, this breakdown of this little trend here makes it look like it was a hard gap down with a pickup in volume, made it look like we might test these lows again. So I'm taking a shot here. Basically, that's what you're doing. You're taking shots. I know you do that a lot of that with your day trading, where you take a shot here, and then when you hit, you're going to hit big. So that's what we're doing here. Now, if it doesn't turn back and it clears this gap, I think that would be the signal. Now, this gap here is already filled. So if it clears this gap, that would be the signal for a decent-sized bounce, at least up here to this next gap level at around 63 to 65. All right, so key in on these major support levels. A lot of you focus on moving averages, which are still worth focusing on, but focus more now on the gaps. and these pivot, major pivot points, like October 2014, talking about. Number 8, it's all about the open close. We've talked about this enough. Really just don't get caught up in the intraday swings. Pay very close attention to where we're opening and where we're closing. All right, and we talked about this before. Maybe you can touch on this with the day trading. Have you, Kunal, upped your day trading or pulled back a little bit in the amount of trades you're taking?
Okay, so I've upped my day trading slightly, but
you have? Okay.
I've pulled back my size considerably.
Okay.
And the reason for it, normally I would actually pull back my amount of trades too, but I noticed from the last time we had this pullback, I think it was during the sequester or whatever it was, the Congress thing, where you got like that 2-week huge flush, and then you had volatility for about a month where you were in a range, but it always felt like the market was flushing. What I found was that I needed to cut back my size, but I needed to take, if I saw good setups, I needed to take them to get to my home run trades and really manage my risk. And so essentially I'm taking a good amount of trades, but I'm managing my risk twice, really tight, and taking really small share size. I mean, I'm taking 200, 300 shares, but I'm going for $5, $6 risks, and so I'm taking.
So really, the dollar's risk might not be more, but you're taking more trades.
Much smaller risk, much smaller size. I mean, I'm probably 1/3 of the size that I would if, market was at highs.
Yeah. So with the swings, you really want to be at these support levels and key pivot inflection type points. I haven't talked about it yet, but for oversold conditions, for the really big moves, we watch that T2-108 indicator, which is stocks above their 40-day moving averages. And this acts like stochastics as an overbought, oversold indicator. And we've talked about extreme levels. You want these to be at extremes. And when we bounced here, the T2-108 had dropped down to about 6, which when we think about oversold conditions, we're talking about 20. So this was extreme. And if we pull it back here to the last major sell-off, October 2014, even that only got down to 13. Yep. So that was a really good signal. If we get that kind of signal again, I'll go along, and that's what I did with that UPRO trade. Basically, I was stalking that condition, that extreme level, and we got that, and that was good for about a 7 or 8 point move, waiting for it to line up here. So, with swings, what you don't want to have happen is to just get caught up and continually get stopped out of these gap ups and gap downs. The intraday trader is not holding overnight, so you don't have to worry about that. But a swing trader during this market, you have to really worry about these gap up and gap down. So you don't want to be in the middle of these ranges. That's what I always talk about here. You don't want to get caught in the middle of the range. You either want to be at the bottom of a range where you can manage your risk properly, or at a top of the range, or have some, if you're entering, have some really nice level to play your stop, under a gap fill, maybe under a moving average, under a pivot point. Maybe we can use, if you wanted to go long here, maybe you use here this pivot, maybe consider this might be a pivot low and it ramps up from here. So you've got your stop under here.
It's the most deadly part in trading. When you're in the middle of the range, you have no edge.
Yeah,
Bottom of the range, you have edge, right? You could take a bounce, you could short, whatever, but you have an edge. You have a line in the sand. Top of the range, you have a line, clear-cut line in the sand. Middle of the range, you're just a tweener. And as you know, in basketball, football, it takes a very, very special tweener, a Draymond Green, to really, to get ahead. But there's 1,000 other tweeners that never made it. It takes only one Draymond Green, right? I mean,
you got to me with the Warriors, all right.
Tweener is the worst in trading.
And how many times have you seen where you'll get a trader who makes the perfect trade at these inflection points, but then starts over trading in the middle of these ranges and gives up all those gains.
I've done it a
I'm sure you
thousand
see it a
times.
lot in day trading. We see it a lot in the swings here, where if you stalked it, waited for that moment, you got the big gain, and now you're done, and you wait for the next move. Don't start just over trading at this level here. Wait for that next setup, and that might not be for 4 or 5 days. That's fine.
It's patience.
Uh,
I had a good student of mine. He bought USO near the lows before it started to bounce. So USO bounced from whatever, like $12 to $16 or so,
yeah,
whatever it
it is.
was.
Yep.
The first day it pulled back like $1. It ran right into its resistance, and I'm like, okay, well that could be a good spot to short for a quick counter trend trade. And instead, like because he had made such a good gain on his win from catching it on the bottom,
Mm-hmm.
as soon as the second day when it pulled back a little bit, he bought right away. I'm like,
Are
so
you
you
talking
had
about here?
yeah. So I'm like, you had
Yeah.
a $4 gain, and it pulled back $1, and you rebought. Like, right?
Uh-huh.
That's a FOMO type of thing.
Yeah, yeah, and looking at here, what's your real edge here? You don't really have one
You're the
when
penis
it's
in
in this
between us,
level.
middle of the range.
Yeah, and where are you going to place your stop? Way down here, it's kind of tough. So you want to wait for that right opportunity. Maybe now here it's when it clears the 50-day, and we talked about keeping an eye on the key support levels. So where's your target going to be? There's an open gap way up here at 18. So
That's a
you
good
may feel
RR.
like yeah, and you may feel like, oh, I don't want to wait till way up here when I can get here at 15, but it's a higher probability trade up here, even though you're giving up that dollar that, you don't know it's going to get there right now. And once you get there, there's probably going to be this magnet up here to that open gap.
At this level, it very well could go back to $13. Like we don't
Yeah, yeah,
know.
and when it retests here, then you have a good opportunity to take that next shot. There is an open gap here too at that level, which
Yeah,
is nice.
that's
So it could
I would
test
shoot
that
for
open
about
gap, which
13.
we've talked about. So if you were looking to trade USO, and we've talked about being selective here, what are you going to be keying in on? You're going to be keying on this open gap
Two
up here
scenarios.
at close to 19, this low pivot low and open gap just under 13, and then the moving average here, if it can clear that. Why would you enter here where, we talked about counter trend trading? Well, this might not be counter trend here, with this balance, but you're making it harder for yourself because you have to clear this moving average.
When you're in the middle, you are just stuck. Your
Yeah,
results will suck. I mean, if you take trades randomly, you will have random results. If you take trades with purpose, then you will have results that you can track and actually be able to measure. But if you're one of those traders
exactly.
that
Yeah,
just says, hey, my stock pulled back, so I'm going to take it, you can't measure your results, and you can't even send it to an elite coach like Paul and be like, can you fix this? Because you're taking random trades which equal random results. It's much easier when you actually take trades with a plan and a methodology. Then it's easier for us to look at it and be like, okay, you have a risk management problem, a position sizing problem, an entry problem.
exactly.
We can be like doctors and diagnose you. But if you're just
No,
a random trader, all we can say is, dude, you need a lot of training. Like,
yeah.
that's
The,
it.
the other thing that happens a lot is you'll find traders who are stalking it right. They know these levels, but when it comes to the execution, the psychology comes in. And that's where you have to be disciplined to stick to the plan that you've got. A lot of times you'll see they know exactly what we went over here. They know they should be weighed, but all of a sudden you start looking at it and thinking, what if it never gets to this level? What if this happens? What if that happens and I miss this move like you just talked about? And you just have to know if you do miss it, there's always another setup. Nothing's gonna. It's not like that was the only setup that's ever going to appear. So you just wait for that next setup to develop. All right. So we talked about being selective. I just talked about the U Pro trade, but that was one where we stocked. We watched the sell-off, we waited for the optimal conditions, and then we got that gain. So, if we would have traded through this, we probably would have lost quite a bit. Eventually, we might have hit this, but we'd probably be just breaking even. But now we stocked it, waited for the right moment, and got the big gain here. Now, handling current positions using the gap down strategy. We talked about that earlier. I don't know if I need to review it again real quick. Google, during the sell-off here, when it gapped down, look for the key support level. We had the gap fill here, and see if it holds. So take out your stop that was probably higher. See if it holds. Don't get stopped out where everybody else is getting stopped out. And if it bounces, stick with it. Maybe get out at a higher price, or see if it resumes its trend. If it doesn't hold, then eventually you have to get out. But that's key during these sell-offs. You have to be able to manage these gap downs, especially if you're in a current position. Now, you hear about VIX all the time. I don't know, Kanal, do you trade VIX?
I trade UVXY and SVXY. I actually
Okay,
don't know what
okay.
VIX is. I just know
So
that when the market gets wild, these things move so much
yeah,
that
yeah.
you have to
So
be.
they move so much that you're using the triple leverage. I actually use the double leverage
I'm a
because
gambler.
even double leverage is more than enough. So I manage my risk even more here using the double. You're using the triple, and maybe for day trading you can use you can use the triple.
Well,
But the gap downs and gap ups are so extreme that I actually look to pull back a little bit, whereas
yeah,
usually I'm using the most volatile measure I can find. But they say VIX measures volatility, but and I have no idea how they calculate it. But if it was a true measure of volatility, then when the market would be going up, VIX would be going up too. And really, the only time VIX spikes is when the market is selling off.
the fear.
Uh, yeah. Otherwise, it's always in a downtrend.
So I had
So
my. You can trade it really small too. I mean, I had my best days
yeah,
ever
yeah. So
trading
I
300,
never
400 shares of this, like small,
oh,
small amounts.
and then you'll make these huge gains because it'll ramp up 10 points, and off a 300 share position, you've got $3,000. But I rarely ever trade VIX. But during sell-offs,
That's it.
that's at the forefront. I'm probably trading that in my shorter swing time frames more than anything. But if we compare here, let's go back, and it always pays to look at past sell-offs and study them. So if you haven't, say you started trading after October 2014, this is your first time being through one of these sell-offs, go back and study these old sell-offs and see exactly what happened. Now, if we look at SPY here, SPY went down from 201 to about 185. So what is that, 20 points on a 205? So about 10%. I think it didn't even hit 10%. It was around an 8% move down, right? Now, if we look at VIX, and this is just double leverage, during that period, VIX went from about 27 to 45. So almost 100% gain on a double leverage. So whereas the double leverage in SPY would have got you, if you were shorting during that period, would have got you about 16%, you're looking at almost 100% with VIX. So it spikes up, gives you this volatility, and the other nice thing is then when the market recovers, you can make even a bigger gain by shorting VIX. You can see here, not only did it get that 100%, but eventually went down even further. So you can make huge gains with VIX. Now, in the webinar right now, I'm not going to go over the specifics on exactly how to trade it, but just keep that in mind. That every one of these spikes here, and we can see here now, during this sell-off, VIX has already 100% gain, and there also have been some decent shorting opportunities with VIX as well. So pull out VIX where we're not trading it during normal market conditions, but when you have a sell-off, you're going to go to those few indexes and sectors, a few stocks, and then VIX. And then finally, the last strategy that I really focus on during sell-offs is pair trading, which I use to mitigate risk. So have you ever done much pair trading, Kanal?
I'm not good at this, and it's a psychological problem.
Uh-huh.
I find that for me, the best hedge is cash. If I'm
Okay.
confused, I raise cash. If I'm
Okay. So,
unsure, I raise cash.
and
Just
that's a
cash,
great
cash, cash.
strategy. That's a great strategy. And pair trading is for someone who's more advanced. And I always recommend before you actually start doing it, paper trade it. And then once you feel like you have it down, then go to actually trying it. But what we're
True.
doing, in the market right now as a swing trader, we really don't. If you put a gun in my head, I'd be guessing to know where the market is going to end up right
No
now.
clue.
Is it going to test the lows, or are we in bounce mode and going to get back to the highs? We really don't know. So there is no huge edge right now. So what you can do, if you can't trade with an edge in that way, you can give yourself an edge by taking, say, a triple leveraged long position in SPY and at the same time going long VIX. Because if the market sells off,
Hmm?
VIX is going to spike huge.
Big.
But if the market doesn't sell off and the market bounces, VIX is either going to stay at a level or go down, and you can manage your risk on these. So what you're doing is you're trying to capture one of these moves, either the big bounce or the big sell-off. VIX is going to get you the big sell-off. Triple leverage SPY is UPRO is going to get you the big bounce. And now you're trying to manage these to where the loss you take, because you are going to take a loss here. So if one of them ramps, the other one's going to get stopped out. So what you're trying to do is get the small loss on what doesn't work, and you don't care which one it is, but you're trying to get that small loss and then capture the big win.
Yep.
So you take a 1R or even a 2R loss sometimes because VIX is so volatile. But say you take a 1R or 2R loss, but you end up with 6 to 10R on the win. And when you do that, you're going to end up 6 on your risk.
So
So
awesome.
so basically, you're getting a 50% win rate. You're going to be right or wrong, but you're still going to win on the trade, even though you had no clue what the market was going to do. So that's really, I use this type of trading all the time in my more aggressive accounts, but especially during market sell-offs when I really have no idea what's going to happen. And if anybody tells you they know exactly what happens, that's a bunch of BS. They don't know.
Paul,
But
can
this pair
you
trading,
talk about a little bit about in these type of trades, like you have a smaller account, regular account, whatever. Like, how do you size this? Because I think, like, I talked to a couple of people of mine. They're always like, dude, you must have like, say I'm trading $100,000 account. Sometimes I'm all in on a stock, just like you told me. If my risk is 50 cents, then yeah, I'm all in,
yeah,
right?
you're focusing not on the size of the position, but the amount you're risking. So you're right. If you're trading something, but your risk is a $100,000 account with one position, but your risk is only $1,000 on that position, that's actually a safer trade than if you're only trading 20% of your account, but you're risking $3,000. Even though it's kind of counterintuitive because you would think the one where you've got all your account in play is the riskier position. It's actually not.
And the other thing with this, guys, is that you can have, no matter what, you can be a pro. So, like, say you're a pro like Paul, you got 100, 200, 300, I don't it doesn't matter what size account he has. You could take a position in VXX or whatever. So the XIV is, I think, the leverage instrument or whatever.
Yeah, XIV.
XIV.
XIV is the inverse of VXX.
VXX. I mean, you could literally, you could be a wealthy man or a well-to-do man, have hundreds of thousands of dollars, and you could still trade 300, 400 shares of this instrument. And yeah, you wouldn't feel like you're really balling out of control or anything. But even that type of smaller amount of shares, you can make your whole month's worth of gains. Like you can still make a lot of money trading. You don't have to be all in. I noticed with a lot of our students, they just, whatever amount of buying power they have, they want to use it. And you don't have to use
Yeah.
it. You can be a millionaire and trade 500 shares of VIX and make your whole week's worth of profits. Like, none of it has to do with anything. These are volatile instruments that give you an opportunity that only really show up once a year, maybe once every 2 years. And so when you see it, do it well. I think the biggest thing that people do where they make mistakes is, number one, they don't have a plan. But the second biggest is they trade too much size. They trade
Yeah,
too much
yeah,
size than they can handle. Because when you have too much size, you are so beholden to the penny by penny risk of things. Something goes up 30 cents, you want to sell it. Well, guess what? Apalta, if VXX goes up 30 cents, can you take that gain?
yeah,
Ever?
yeah. And then when you're in the position where the position is going down, you're going to get stopped out. If you're nervous about it, if you're panicking about it, you're trading too big.
Too
You
big.
should be trading at the size where if you get stopped out, it's no big deal.
You have to
So
earn your
if
big
you
boy britches.
yeah, if you've got a $10,000 account, you shouldn't be risking more than 100 or 200 bucks. And that's not position size. That's the amount you're risking. The amounts you would lose if you get stopped out. Um, if you lose 100 bucks, well, you still don't want to lose 100 bucks or 200 bucks. Going from 10,000 to 9,800 is not that big a deal, or 9,900. It's not going to keep you up at
You
night.
will live.
So you,
You will live. You will put food
yeah,
on the
yeah,
table. Your
and
family,
you
your job, all of that is so important. You
And
know,
not only that, we talk about making good decisions. You'll make better decisions because you're not worried about, taking that big loss, and you'll be trading the setups. But going back to the pair trade, you asked me how a small account holder, how would you do this? So in a sense, by trading VIX, you're in a way, going long and short the market by doing that, and you don't know which way it's going to go. But you're trying to capture that move. So what I would do if you've got a $10,000 account, whatever what would be 1% of 10,000? Is that
100
100,
bucks.
100 bucks? So I would have my risk set, you know, position size so you can take both positions and risk only. Maybe you have to give yourself a little more on this because these are so volatile. But say you risk $200. Risk $200 in each, which however the position size comes up, and that would be you pro would be trading, but you can figure out how to position size it. But make sure you risk 200 each way. So you're risking 200 with U Pro, you're risking 200 with VIX. And again, the idea here now is with the trade that wins, you're going to make 1,000. With the trade that loses, you're only going to lose 200. So then you end up, by mitigating your risk like that, you made 800. And the worst thing that can happen is you lose 400. So basically, at most, you're risking $400 to make $1,000. And the way the 400 would happen
Mhm.
is if you get stopped out of both positions because the market just gets in a small chop range rather than making the big move. But you've really mitigated your risk. Even if worst case scenario happens and you get stopped out of both positions, you've only lost 400 bucks on that $10,000 account. So that's a really good strategy, pair trading. I do it all the time, but I really key in on it during these types of sell-offs when there's indecision and you really don't know what the market's going to do. All right, full-time traders. If you are a full-time trader and you focus on swings, but we've talked about, you need to really be patient and you just can't taking 2 or 3 trades in a couple of weeks. If you've got some day trading background, do what Kunal is doing and, focus on your day trading. And, a part-time trader or, full-time, if you got a full-time job, you probably can't do that. But if you've got something else, it'll help you with your swings in the sense that you're not going to push your swings and
Sure.
just trade for the sake of trading. You can use a strategy specific to intraday trading. And
So
if you can't do that, and you've got a full-time job that doesn't allow you to do that, focus on your job. Focus on other things. But it's really key not to just start over trading during this period. If you start over trading, that's when you see these guys who have been fantastic for 3 or 4 months. Then a sell-off happens. They start over trading, trying to make back gains, and then they lose that 3, 4 months of profit.
that's the worst feeling in the world because that's what causes gambling because you know that you have to do like little gains to build it back up. But when you have a big loss, you never want to take little gains because you're only thinking about not your next trade, but the big loss. And
Yeah, yeah,
so it ruins you psychologically. Psychologically, whenever you take a big loss more than you can handle, the thing is you can come back from it because most of you guys will know how to trade. So you can take small gains just like you're supposed to and build it up, but you won't do it. You'll only go for that first trade that you're winning. You'll only go for the home run to get back to where you were. And
Yeah,
that can
exactly.
never happen because if guess what happens? I mean, Paul's Indian, I'm Indian, but neither one of us are mathematicians. We probably didn't know. Right? If you lose
Yeah,
50%, if your stock goes up 50%, you don't get your money back. Right?
exactly. Yeah,
You've got to,
yeah,
it's got to go up 100%. And so that's a huge, huge thing of guess what? You lose 25%, your stock doesn't have to go up 25% to get it back. And the thing is, the odds of your stock going up 50% or 100% are very small. In any
not
given
very good.
market or any given quarter, there are 20 to 30 stocks that make those type of moves, maybe, that go up 25 to 50%. That's it out of the
Yeah,
thousands of stocks. And so if you're in a stock that just drops 50% or 25% and you're in a drawdown, you will not make the money back in that stock statistically if you're looking at just probabilities. It may happen, but if you're looking at probabilities, the odds of it happening in a 6-month time frame are very, very small. If you lose 50%, it's got to go up 100%. And statistically, there are only a handful of stocks that go up 100% in 6 months every year.
yeah. You just have to. It's kind of it's a lot like in sports. If you lose 3 or 4 games, you're not looking to get back those 3 games. It's one game at a time, and that's that saying. It's a
No,
cliche, but it's the same thing with your trading. You just have to work it and make. You will not make it back with one trade. Um, all right. Finally, now we've talked about trading during the sell-off mostly here, but there's that final big move, and that's what you're looking for. That's what you're stalking. The reversal. Sometimes it's a continuation, but uh, mostly, especially during sell-offs, the market's always, if we look at the 30-year, it's always going up. So eventually, you're going to get that final big move that you can play. And if you haven't traded through the sell-off, or if you're breaking even through the sell-off, that big move can change everything. If we look here, going back again, we're studying a past sell-off, 2014. If you did not trade through the downtrend here, you had a clear signal of when to get in. You had these extreme oversold conditions. We pulled up the T2 108 indicator before. It was at
preparation.
13. It was at 13, so extreme levels. If we pull it here and don't look at the future, you can see here we're looking for this reversal candle on a daily. We had this hammer here, and then you could have entered on that or on the confirmation, which still wasn't too late. And then after that, if you didn't trade through the whole thing, it got boring. You thought you're not doing anything, you're not making any money. Well, from here, you could have made your year on this 185 to 205 here. So
Paul, just curiosity for my own learning. Um, when that drop happened, we're looking at
yeah,
the extreme. So I use T2. It's crazy how much of all the stuff I just jacked from you, but so I use the stochastics the same way as you. The T2 108 just the same as you. Is at I forgot if it was 12 or 13. It was somewhere in that range. And then I use the bollies. And once I see
the
that
what?
candle, the Bollinger Bands.
Oh, okay, okay.
And once I see that candle complete out of that Bollinger Band, just piercing it, but I was
Uh,
looking for a level of support from the past. That's how I learned it from you. The best Bollinger plays are you pierce the Bollinger, oversold, extreme
then
oversold stochastics, and
then
then
you
you
get
get
back
a
in.
level from the past. Now
Yeah,
you have something where you don't even need confirmation. You can go in. I mean, as long as you manage your risk a little bit, you can go in anticipatory even because you have a very, very rare setup that doesn't actually happen that often, like at least in the markets itself. And so
yeah.
like that day, that Monday, like when we were in the chat room, I mean, that when that market fell 1,000 points, like I
Uh,
did number one, Bollinger Stochastic, the T2 through 1.8. But the other part was, the historical analysis. From what I had gathered, the few biggest down days in the Dow's history were 700 points. When that sucker was hitting 1,000, and you're getting all these stocks like UA hitting the 200-day moving average, you kind of close your eyes and you may have to buy 100 shares. Not many. You can buy.
Take a shot, yeah.
You got to take a shot. So you maybe, and then you look at the range. So you buy 100 shares, maybe 200 shares or whatever. You may need a $3, $4 stop because of how bad the market's fallen. But also historically, we know 1,000-point gap on the first candle of the market. Very rarely, right? What are the odds you're going to 2,000? It could happen.
Yeah.
It could happen.
So there's probably going to be a bounce, which you're trying to play. There may be a retest now, so we don't know now here if it's going to continue up. But you want to play it a few times in here in case it does continue to go up, and then be ready if it drops here. But we're waiting for that big move. Maybe this was it here, but we really have. It wasn't back in October 2014, we had the strong indication the way these candles lined up.
Yep.
Lined up a little differently. This again sounds counterintuitive because it's at a higher price, but I had sent out an alert on this day saying if the market closes strong, I'm going all in. And so if it would have closed up here, even though I'm buying 4 points higher, I knew that the buy was in and we were going to bounce really hard and maybe even get back to the trend, like in October 2014. We got this kind of weird close here where it's almost like a doji. So that has me wondering here, was this it? And I don't know if it was. But we waited for a little confirmation, got a nice play in here with UPRO, and now I'm waiting for that next setup. So we'll see. We'll see if we get that. Yeah, so we're waiting now for that. What I would actually love to see right now, and nobody wants to see the market go down, but in terms of really setting up probably a historic trade would be to break down these October 2014 lows, get a big move down, get extremely oversold, and then get the buy opportunity.
Yep.
So we're watching for something like that, for that last point during the sell-off here, that big play we can do to get that huge gain.
Hey, Paul, let me ask you something for retirement. I'm just throwing this because everything I know about, so I mean, even though I day trade a lot of what I've learned about my retirement accounts have been from you, and I handle it in a very, very specific way. I mean, when you get these extreme oversold levels, the natural reaction is to clear out your retirement accounts. And what I've been telling my students is when yeah, right here. Is it good?
I've missed the whole. You kind of froze up through the whole thing there. Yeah.
All right. Sorry. Are you good now?
I'm good now. Yeah.
All right. So a lot of what I've learned about my retirement investing, which has actually been really, really good. That's where I do a majority of my swing trading. A lot of what I learned from my retirement investing is from your swing trading concepts that you taught me. But one of the things that I've done with my retirement accounts is when that T2108 indicator gets into the 85, 90 range, I really pare back my long-term investments. And
that's exactly what I do.
And when it gets under 20, I don't just start buying, but I start scaling in a little bit because I know it can get to 10. So if it's at 20, I get it some. If it gets to 10, I load the boat. And if it got to 5, I'll borrow money, essentially.
Wow, that's funny because we never went over this, but that's exactly what I do too.
I'll borrow money. I'll sell my house.
Actually, at 20, I really wait for my longer term account. I've got 4 different accounts I trade.
Me too.
For the longer term account, I wait for these extreme levels.
It's amazing.
When it got to 6 here, I did some adding.
Yep.
And it went. Eventually, it's going to get up. Now at 80, I'll start thinking about it. I'm stocking, or at 20 where you were talking about. But once it gets to about 80, I'm going to think about paring back. But I probably again will wait for the extremes, and when those start to hit, then I'll start pulling back, and then again wait to add, when we get another extreme level.
And it's
Yeah,
so the
that's
opposite of
exactly what I do.
what people do, right? It's like, and even if you have a 401k, when the market gets into certain levels, you have to, like this year, the market's in a range. So when it's hitting the top of the range, it's okay to sell your stuff and buy on the
Mhm.
breakout and rebuy
Yeah,
on the
yeah,
breakout because the
exactly. You can
market never broke
rebuy.
out. And it's okay to do that and chase it higher. And so what I tell people is it's like a car insurance. You may not use it. You may not use it. You may not need it. And so you're going to pay this premium. But guess what? If you need it, it happens. And I think
Yeah,
that's a huge thing is just,
and that's the thing you talked about there, where you can get out at that resistance level and rebuy. And there's so many people that are afraid to do that. They take the profit and they don't want to buy again at that higher price. But you now you've got the confirmation that you're in that next kind of trend, so you can re-enter.
and you're only paying 1%. You're paying such a little insurance. Your insurance
Yeah.
number is really low when the market's in a range like that. Your insurance
Uh,
number is like 1% or 2%.
yeah.
First,
Yeah.
when the market is all over the place, your insurance level is very high. And so
Yeah. Yeah.
I sold out of all of my stuff, and I took the risk. I took the risk of saying, you know what? I couldn't actually tell, and I've learned a lot from you. I couldn't
Mhm.
tell if the market was in accumulation or distribution for most of the year. Only till the
Uh,
last month did I see the signs of distribution, and then I knew.
yeah.
The last
Yeah.
month when the leaders were getting taken out, and I would say it in my chat room all the time, I go, guess what, guys? If you're not in Fit, you're not in Apple, you're not in Google,
Mhm.
or you're not in Netflix, you are under your major moving averages, this market's fucked. But
Yeah.
before that,
Yeah. Mhm.
before that, the market was just, it was hard to tell anything. There was no accumulation or distribution. So I couldn't tell if the market was going to break out or down. So I took the insurance of saying, hey, this is my hard-earned retirement. I'm going to sell out and go to cash. But if we break out and we
You're in that
confirm,
next trend then.
I
Yeah.
will be in a trend and I'll pay 1% penalty on the market,
Mhm.
but I will get a 10% run.
Mhm.
Fine. But
Well, that's fantastic, because that's how you beat the market, because most people are basically at the mercy of the market, with their retirement accounts. Whatever SPY is doing or some of these big stocks are doing, they're either going to lose or make their retirement like that. But having that, and that goes back to the trade management. That's that 33% that we talked about. That's all trade management, and understanding these things. So yeah, that's fantastic. I did some of that, not to the extreme that it sounds like you did, but I did pare back. Google's one of my long-term positions, and I pared back in it a little bit. But it had that. I had it in mind that it had this earnings breakout, and I just wanted to be in it still. So I was still in it, which got hit a little bit here, but I did use some of that strategy there.
it's awesome,
So,
and it's a different thing because I trade my retirements account the way you taught me
uh,
to swing trade. So I'm not going the longer term. I'm using the 533 stochastics, which means, guys, everybody asked me like, why, Paul? You wouldn't believe like how many people ask me about this.
uh,
Everybody asked me about why I use 533
533.
stochastics, and I go,
Yeah.
you know what? And I tell everybody the truth. I go, listen, in the end, you can make money or you can sit in the nuts and bolts and try to figure out why the world is the way it is. I go,
Mhm.
I don't really know. But my guess
I
is
told you
because
this years ago. What do you mean you don't, you don't
I
know?
know. Well, I'm trying not to confuse my students. I go,
Okay.
the reason
Okay.
is we're aggressive swing traders.
Uh,
So if you're a longer term, smoother swing trader, use a 1433, which is
exactly. It goes
you're
that you
gonna
got to trade the time frame you're on. So
we
the
use
14,
533 because
yeah, the
we're
14 is great
animals.
for someone who's taking position trades, that are 6 months to a year. But if you're trading 2 days to 2 weeks, waiting for the 14, you're going to miss out on so much.
It's
And,
done.
and so that's why we use the 533.
And all famous swing
And
traders use 1433 and I teach the 5-3-3, and everybody goes,
Uh,
and I did a Groupon class. I had thousands of people in there, and everybody asked me.
uh,
I go, listen, this is how you don't question your parents, okay? When your parents tell you that carrots are good for you, you fucking eat them. And because I didn't even want to get into it, but the reason is that listen, we're short-term aggressive swing traders. So
yeah, yeah,
stocks, they move up over time, yes, for months at a time. But from what I've learned from Paul, stocks typically take 3 to 5 day bursts where they come off support and you have a 3 to 5 day period where they really explode and then they pull back a little bit and then they may explode again. But they happen in those 3 to 5 day big bursts. And
yeah,
we're not into like, let's catch a 50% gain over 6 months. What we're into is let's catch a 20% gain in 5 days. That's
yeah,
what we're
yeah,
trying to do. Because after 5 days, it's going to pull back anyways 10%, and then we'll re-enter. But guess what? We want those short-term bursts. This is the way you maximize your gains by holding the minimal amount of time, and that's why we use a 5-3-3. And it's like so many people have asked me that and never actually told them the real answer. But I know.
oh yeah, yeah. You talked about Groupon. Here's a little story for you. So we had lost touch for maybe 2 or 3 years. I'd really focused. I had some health problems, had kids, and I had to cut down what I was doing. But my mom had told me, my mom's shops like crazy, so she's on Groupon, and she told me there was this trading thing on Groupon, and she asked me if she should do it, and I said no, they're all scams. I didn't know it was you. But I remember taking a look at it, and I think it was Bulls on Wall Street.
Yeah.
And I didn't know you were even that was you,
Yeah.
right?
We lost touch for a couple of years. I mean, I was so
Yeah,
busy.
yeah.
And your
So I had
kids
seen this
are so
Groupon.
young.
I'd seen this Groupon. I had seen Bulls on Wall Street. I told my mom it's probably a scam, and here I am with you now. But then when you contacted me, like a year or two later, and you were telling me, hey, I got this Bulls on Wall Street thing, and I was like, in my head like, Bulls on Wall Street, where have I seen that before? Oh yeah, that Groupon that I told my mom not to do. All right, that one.
It was awesome. I mean, what I learned is to change my life. Like, it's always funny. Like, people are. I mean, I'm not the smartest of guys. I'm not like you, man. I'm not a lawyer. Like, I was a cold caller. Like, yeah, I'm a smart guy. I'm street smart or whatever. But like, I wasn't educated smart. Like, I'm not that smart. And like, what a lot of people don't realize, like, if I hadn't met you, like, I would have been doing what I was doing before. And it's like people always say, well, I don't want to pay for education. I can make it on YouTube. I go, listen, Paul didn't charge me much. Like, we would be on instant messenger and, he charged me $50 a session or $100 a session. I don't even remember what it was. But like what the cost was versus, right, the benefit was it took 10 years off my learning and, right, it changes your life.
Yeah,
It's
yeah.
just so weird. Like I always talk about it. I go, Mary Beth, she was making the slides and she's like, I'm like, hey, I want these slides to be a certain way. And she's like, why? I go, because this is like my mentor. Like how you're scared of me, I'm scared of him. Like I'm like, that's how it is. Like we have to have it like this. It's got to be awesome. And
Yeah,
she's
yeah,
like,
it's funny, like,
he
it's
looks at me
funny,
like the
like,
big boss. And I'm like, I'm not the big boss. I go, I'm this boss of this, but he's the big boss to me. And it goes in full circle like that. Like you always think you're like the man, but you're not really the man because you learned it from somebody else.
and what's so cool for me is, so I've got, way back when, some people I mentored, and you're, one of the top dogs there. But then to see like someone like you, who you've then taught and mentored, and it's like this tree, and then I see how, that it's almost like another generation, and I see how they've adapted things and changed things, but I can see how it goes back up and stems from, this thing we were talking about way back when. So it's really cool to see
You're
that. Like,
like Bill Walsh.
yeah, yeah, like when you're,
You're the
um,
anti-Bill Belichick. He's not. You're Bill
yeah,
Walsh.
yeah. So like on Twitter, your former student, I think, Chris Z,
Yeah.
right?
It's like one of
and
my good friends.
I'll see stuff that he's talking about, and I think this was before I knew he was one of your students, and it was like verbatim the stuff that I talk about. And then it hit me when he started, when I found out he was one of your students. It was so cool to see that, oh, the stuff it has not just stopped here. It's just growing and growing, and there's trees, and I'm sure people will learn from them, and it's going to be this huge kind of thing.
People
So
always
that's
tell
pretty cool.
me
Pretty
I get
cool.
all this hate from YouTube is like the worst, but I mean
Uh,
Instagram, Twitter is awesome. You get like really some good fans. YouTube is like really where the cesspool of people hang out. And I
oh
always get
yeah.
these haters. They say, "Well, if you have such an edge, why would you tell anybody it'll die?" I go, I don't think that's the case. We have like this tree. Like I learned this
Uh,
from somebody. I taught it to thousands of people. He taught it to thousands of
mhm.
people, and we're surviving. And it has nothing to do with, hey, I have an edge and I'm going to keep it to myself. Like
Yeah,
it's
and you
not
know
like
what?
that.
We're a really small fish, and if something's going to get discovered, it's going to get discovered, and we just continually adapt
Adapt.
to
We're
it. The
so
stuff we're
fast.
talking about now is some of it is very different than what we were talking about before. We're just continuing to adapt here and learn. Yeah,
It's
so that's
so
great. The more
fast.
people you have, the more you have to learn from and adapt with.
And we're all sharing it together. So like you have an awesome group of traders like in your part-time trader group and stuff like
Yeah.
that. So like as you get older and your kids get older, what you're gonna find, and this is what happens in my chat room, you're gonna find out that the things that are going on, the intricacies of the market, you may miss a couple because well, life goes on and you're doing your thing. But they're gonna tell you. I have the same thing in my chat room. Like people ask me about whether I use news scanners or do I do
Mm.
this or that, and I go, no. They go, how do you know about these hot stocks? I go, my students tell me about it.
Oh yeah.
That's
Yeah.
it, right? That's
Oh, that's
the
awesome. Yeah.
community. And so as we all grow and we work together, the community, it will, when you have 1,000 eyes on different things, it doesn't make it less valid. It can make it more powerful because we're not going to miss things. We're essentially like supercomputers. Like Paul has got a group right now of people he's mentoring and doing stuff, and they talk to him. And guess what? He's got 50 people that are like me, like all looking at the same stuff. He's never gonna miss a rubber band setup again because people are gonna be fun.
Oh yeah.
Oh,
Someone's calling it out. Yeah.
oh,
And
is this a rubber
yeah, I
band?
can't count the number of trades I've taken or stuff that's in my focus list that maybe I missed, but someone else, called it out, and I was like, you know what, that does look good. How did I miss this? Yeah, it's always good to have these other eyes.
Paul, give me a rundown of. I mean, we've been a couple hours in this. Give me a rundown of what you do for your the swing trader service. Like, what do you do besides teaching me? And
Mhm.
guys, by the way, I've mentored so many people, and I've sent them Paul's way to finish them up. People that um, have needed extra help, that were more predisposed to part-time trading and swing trading in general. Phil and Justin, I got so many actually. It's awesome to see because we're working together in that way. But give me an idea, like what's going on in your part-time trader service? Like, what do you get out
So
of it? What's awesome about
so in the trade report, the main crux of it is the daily video in the evening. Basically, especially if you're a part-time trader, you've got a job, you've got kids, you're in school, whatever it is, that 2, 3 hours of research at night you would be doing in 10 or 15 minutes reading that report, you have everything you need, in the market. There's a 10 to 15 minute video where I go over what's going on in the indexes, what happened that day, the focus list, stocks that I've added, subtracted, the daily list of stocks we're looking to trade the next day. There are trade alerts, but you don't need to just be going off my alerts. If you've got that focus list, you can do your own research, which is probably the best way to do it, and make your trades off that. So basically, that 10 to 15 minutes you spend in the evening sets you up for the next day. Uh, Intraday, you're going to get trade alerts, which is for my trade report account. Any trades I make in that, I send out to you guys within seconds of making the trade. Uh, Usually, not every day, but usually there's an intraday video So at some point intraday, you'll get another video, setting up what we're seeing in the market right now, going over the trades I might have already made, current positions, and then the plan going into the close, because a lot of trades happen, at the open or at the close. So we'll have a game plan, maybe an adjusted game plan from what was in the evening for the close. So basically, this 15 minutes you spend is really all you need, and it takes the grunt work out of what you would have to do. And on top of that, it's educational also. It's not just a trade alert service. If you listen to the videos, now there might not be a specific lesson set up, but if you just listen to the videos for a month, it's like osmosis. It just gets in your head, and you just start understanding things. And sometimes I'll get some newer traders who start watching it in the beginning and have a lot of questions. Maybe they don't understand what's going on. But after about a month of listening to videos, it all starts to sink in, and you get that kind of aha moment where you start understanding everything. So I really focus probably on the education part more than even the trades.
It's awesome because before I actually reached out to Paul, I had learned, so I was an unprofitable trader on and off since the age of 18 to 24. So I mean, you're talking about a long time. A lot of you guys think you struggled. I sucked. I'm awful. The reason is it's a personality defect of just, I love to go for it. I mean, in business, with women, whatever, no matter what it is, I ask my guys all the time too, because we throw it out as a group discussion. The other day I was up like $4,000 or $5,000, and I gave it back actually. But before I gave it back, I go, guys, what do you think we should do? Should we cut it today and go to the beach, or should we go for it? They're like, Canal, you always go for it. I'm like, fuck it, let's go for it. That's my thing. And I sucked for a long time. But actually just going to Paul's blog and reading, this is when you had the Market Speculator blog spot, the old school one where it was just the Google blog spot. I mean, nobody's even fucking using this stuff anymore. But he had the Google blog spot, and he had a stockcharts.com pictures on there. This is before we were using TC2000. Well, actually, we were using TC2000, but
we were using it, just couldn't annotate it. It was really tough to annotate.
They didn't let you paste the photos and annotate it.
Yeah.
So we were using stockcharts.com. I'll tell you what, I don't like stockcharts.com for scanning and stuff, but for actually posting pictures on a blog, they're beautiful charts. Beautiful chart. So just from going there, I improved my trading so much where I was like this horrendous losing trader to I started at least understanding patterns and stuff like that. I mean, there's just so much you can learn from just reading blogs and stuff before you even get there, because so much of trading is you get herky-jerky because you've done so much research that you have this expectation of gains. But also, you don't know if you've done herky-jerky. You don't know if you've done the right research. To this day, I do all this work. I mean, I think I'm the baddest man in the game. That's how I think of myself. But I go through Paul's weekly, I go through his daily swing report all the time. I steal all his picks for my IRAs and all stuff. But I read the Kirk report. I read other stuff. I love the Kirk report. I've read that for 10 years. There's things that I was reading even before I met Paul. And there's these awesome, and so it's just supplementing yourself. There's nothing wrong with it, but the more information you have is the better. But in the end, having a service that fits your strategy is the key, and it cuts down on your homework, because a lot of mistakes happen from when you have paralysis by analysis. And one of the things that Paul taught me was, number one, just watch a handful of stocks so you don't have paralysis by analysis. Exactly. But also I used him to do a lot of my research. And so it was instead of spending all these hours thinking about what I'm going to do, I still did my stocks. I did 4% breakouts, and I did my go-to stocks. So that's about 400 stocks a day rather than thousands. Then I went through what Paul said, and I compared them, and then I narrowed it down into 5 or 6. And it was awesome because most of the time, once you get the strategy right, you'll have the same stocks. Like you're gonna have the same stocks as your mentor, and now you got confirmation. You've taken a lot of thinking out of it, but that's really the key deal. Is that I think that people naturally, Paul, they have the cognitive overload of anytime you learn something new, there's a cognitive
You
overload
just,
of
yeah, you want everything. And what I always focus on, people want to make things more complex than it is because they feel like they're doing work. They feel like somehow it's giving them an edge. But really, the key, it's in almost everything. You hear about it in art all the time. Like the greatest art is simplicity. You see artists, they started off with a lot of lines, and by the time they've really mastered what they're doing, they're using less lines. And it's the same thing. You want to make the complex simple. And that's what you're really trying to do. And I've seen you've done it, in what you're doing. Uh, I don't think you're doing, 5 hours of research a night. You
20
have this
minutes.
process, this routine down. You've simplified everything you do.
Paul, I can go through 1,000 charts in 20 minutes. It's just because you know what TC does, space bar, space bar, space
Yeah,
bar.
you know exactly what you're looking for.
So I'm just looking for pattern. I go
Yeah,
through the indexes just like you taught me.
pattern recognition. Yeah.
I only do the indexes on Saturdays. Sundays, just so that I have a weekly game plan. So I do the
Uh-huh.
indexes on Sundays only, so I don't confuse
Yeah.
myself. Then during the week, I do 4% breakouts. And then I go through our focus stock list or go-to stock list of the 200 names we're always watching. And then I scan for earnings breakouts or earnings breakdowns, which is like maybe any given day, a few that are awesome. And that's it. So I just dumb it down so much. I tell everybody, I'm like, listen,
And
you got a
it's
third grade reading level. That's
yeah.
all you.
Well, it's not really. I think it takes more intelligence to quote unquote dumb it down. So that's really the smart thing, and knowing what to dumb it down to actually takes a lot of skill because you're not just randomly just picking these few stocks. There's a reason, a complex reason that you've simplified for doing that. So yeah, that's fantastic.
All right. Well,
So hey, are there any
last thing.
questions?
Let's answer some questions, but let me just get last question because I think this is huge. I always tell people
Okay.
the same thing, but coming from uh, the originator of the tree is a huge. You're new. You don't know much about trading. You think you have some money saved or whatever, but you're just a regular person. Like, what do you need beyond just education? I mean, you're going to get the education in the swing trade service where what do you need as a person you think to be successful as a trader? Like, I know what I think my students need. I mean, what do you think they really need? Like, who do you have to be? And can anybody do this?
The biggest thing is the mental game because this stuff is not really that difficult to learn or teach. It's not like rocket science. I can teach this to someone within 6 months, and they can have it down. And the rest of it is all the mental game. The person who can, there's 20 people that know exactly what to do, but only 5 are going to apply it. And I think you're an example of anybody being able to do it, not because of intelligence. Whatever you say, you're very intelligent. That's not the issue.
Kicked out of
But
high school
actually,
and
that
barely graduated college.
that doesn't matter. I can see that you're intelligent, but it's not that. It's with you. It was your personality, your go, almost manic personality. You would think someone like you couldn't be disciplined enough uh, to follow these rules, and you picked it up probably faster than anybody. Somehow you have that mental game inside you that makes you do the right things. Maybe you mess up every once in a while, but you've mastered that mental game, and I think that's one of the biggest things. You've got to learn what to do, and then the rest of it is all about discipline and mental game and fighting all these things. Look at all these things we've touched on today that were all mental game, micromanaging, risk management, trade management, small losses. These are all mental game things. We all know here what you're supposed to be doing. It's just a matter of executing and doing it. So that would be the biggest thing, is really get inside yourself, get inside your mind, and just, sometimes you just have to be hard with yourself. And it's not, when I talk about this, then I get people ask me, okay, what self-help books should I read? And that's all BS. If you
Fuck.
start doing that, you're just playing this kind of self-help hobby kind of thing where you get into that. It's not that. You just have to be tough with yourself, and just always say, do the right thing and just get yourself right.
Your mentor will give you the most self-help you will need. I'll give you the biggest self-help any of you guys ever need. You all were meant to be special. You all were meant to be great. Every single person has greatness inside of them, but greatness has a cost. That has a cost. There will be sleepless nights. There will be moments that you doubt yourself, and you will 100% get knocked down repeatedly.
Oh
But
yeah,
it is
yeah.
your choice. It is your choice as a human being whether you decide to get up. You will get knocked down. It's your choice whether you get back up. And that's on you. In
And that's
trading, you know what to do. When you go with Paul taught me all this shit. I knew exactly what to do. And sometimes I'm holding the mouse and I didn't do it. I went against it because the FOMO comes in, or the fear comes in, or the greed comes in. But I was given the skills. Paul gave me a multi-million-dollar skill, but I didn't choose to use it right away. I fought it. So he gave me a skill, and then he showed me how to be disciplined, and then I still fought it because I believed that whatever, when the lights turn on, I thought I could shortchange it, or I could do this, or I could do that. I thought I could fight it, and it never worked. Like Paul told me, like after he looked at all my trades, he told me I needed to use hard stops. And I still didn't use a hard stops for a year after that. After I learned so many hard fucking lessons of going to
yeah,
take
it's
a
experience. Yeah.
I went to go take a crap and I lost a bunch of money. Or a stock, the markets were crashing. Like 2011, the markets were crashing, the flash crash type of stuff, and I froze because I had mental stops. I'm a strong guy. I'll hold my stops. Well, guess what? When the stocks move so fast, nobody can stick to their mental stuff. It's an impossibility. And so you have to just come to that. But I'll tell you this, that you need an above average level of IQ and a high level of emotional IQ. Okay?
Exactly. And you can
Intelligence,
develop that.
that's it. Baseline. But emotional IQ has to be high. You have to understand that you cannot shortchange what's been taught to you, that what's been taught to you has been tested over not just Paul's lifetime. Paul learned this from books, and those people that wrote the books learned it from other books. I mean, this is like, we learned Jesse Livermore stuff. This is fucking 100 years old.
Yeah.
Risk management and position management's always there. But I always just challenge all you guys who don't think it, you all were meant to be great, but it has a price, and you still got to go out and do it, and that's on you. I tell my guys all the time, like, you know what to do, but can you get your fingers to know what your brain knows is right? And it's fucking hard.
It's hard, yeah, and especially, another thing is handling losses and drawdowns. Everyone's going to go through it, no matter what. We're playing probabilities that, aren't 80 or 90% probabilities. They're 55, 60%. So sometimes you're going to get caught up in that 40% down cycle, and you're going to have, maybe even 8 or 10 losses in a row. And that's the level. The good traders come out of that. They have confidence in what they're doing. They don't start trading differently or start getting too, starting getting too big, trying to make it back all at once. And it's really how you handle just like in life, how you handle the difficult times that really makes great traders.
Paul, let me ask you some questions. A lot of this is like some of the similar stuff. Multiple people ask, like, what do you feel is the strongest levels of support? Like, we talked about the gaps, so let's take away the gaps. We feel right now that the gaps are the strongest. But out of the moving averages, what's the strongest levels that you think that will hold, especially in today's market, but also in uptrending markets. I always believe
Well,
the 50 days kind of your line in the sand.
for us, I found the 20-day used to be pretty strong, but now it's starting to feel almost meaningless to where you can see here, I've taken it off my chart. It'd been on my chart for years,
It was so
and
hot
I
for
actually,
the beginning of the
yeah,
bull market.
yeah. Maybe when you get a really strong trend, you can bring it back, but the 50-day, basically, the longer the trend, the longer the longer the moving average, the longer time frame, the stronger it's going to be. So, we use a 50-day, but 100 is going to be stronger, 200 is going to be stronger. And now the way we have to trade them differently than we used to, which
Yep.
we touched on before in the webinar, where you can't just always buy at the moving average, where we used to. It was just like close your eyes, buy at the moving average, it's going to bounce. That doesn't happen anymore. You can buy at the moving average. If you do, you better give yourself a really loose stop, or
Yep.
wait for it to violate and then play that remount. So it is a little different now.
So Paul, what I've been doing with the 20-day now, I've also exited out of my lexicon of actually using it for support. But say I
Mm,
have a flat top breakout and the market is bull, only if the market's bull.
mm.
Like, I wouldn't use it
Yeah,
now. So the market is
sure.
bull. We're above major moving averages, only above major moving. So say we have a flat top breakout and we break above the flat top. Then I overlay the 20 as the first level of support because the market is in a bull and we broke out of a bullish formation. Then I add in the 20 because that will be the first line of support. But
Okay.
otherwise, I've
Yeah,
been taking it out because besides that instance, the 20 days just cutting through.
yeah,
If the
back and
market's
forth.
under supports, then it's just going to cut
Yeah, yeah.
through. A lot of people have been asked about, can you explain stop gunning?
All right, stop gunning. So let's say you buy at the 50-day. When you buy at the 50-day, your stop is going to be just below the 50-day. And I don't know. You probably know the mechanics of it better, Kunal, because I know you've been in touch with people who know that inside stuff. But whoever is doing this, whoever these what we used to call market makers, I don't know what they call them now,
There's
but
no
they know
such
all
thing.
those stops. Yeah, they know, whoever those computers, those robots, whatever it is, they know where everybody has their stops. So what you see all the time, price will go right to your stop and then bounce from there.
Yep.
So when you place a stop, you have to think about where everybody else has them and actually place it lower than that. Otherwise, you're going to get stopped out with them, or you wait for all these stops to get taken out. You wait for the remount, and then it's all systems go, and you can enter and play a move.
And so I think that this situation, though, Paul, is a classic example of why you don't need a high win rate and why people focus on win rates, lose. Because, so this is what I do. So say a stock is, and I only do it if it's a very, very orderly pullback now. Because I know about the gaps, and I know the moving averages don't always help. But say I've got an awesome stock. It says, okay, very small candles, very light volume. So say the stock pops up 40%. And then it pulls back 15% or whatever it might be, but it's just so orderly. So the candles are small. The volume is small. And it pulls back to, say, the 50. I'll take a shot at the 50 and put a stop under, but I'll use, say, the average day's range to give me some room. Now, a lot of people get stopped out, and they say, oh, my God, my trade is awful, like, ha-ha. But what they don't realize is because the pullback was so orderly and the volume was so light, it may break under the 50. If it remounts, it's actually a double confirmation. It's like
Yeah.
better than it actually bouncing off the 50. So I may have lost once a few dollars. I actually, when it remounts, I actually add a little bit more size because I found that the probability is so much higher on that I can build more
Once you
size.
get that remount and all the stops are gone, then yeah, it's kind of all systems go there. So adding, you can do that. And then if you do get stopped out, there's a tendency to be afraid to get back into a stock once you've been stopped out. or they just throw the setup out and will never go for it again. But really, it was a good setup, and if it recovers, you can re-enter. So
So
yeah, two ways to play
50%.
it.
Yeah. So
Yeah,
don't get
yeah,
afraid. Like, yeah, you got stopped out. So what? Some will, some won't, some won't. So what? Like, get over it. I think a lot of people, they get stopped out and then they just quit. Like, they're like, okay, it's
yeah,
done. But that's not
yeah.
the case. The remount is more powerful than the original setup because you've got double confirmation.
Oh, definitely.
All right, I just got a couple more that people have been asking all the time. Um, a few things, like, and yours will be different than mine, but what are some ETFs that you watch all the time that help you get a gauge of the market, but that you also trade?
Gauge of the market. I'm always watching SPY just to get an overall feel. And then more specifically for the stocks we usually trade would be the Russell, so IWM. And then if I actually am going to trade them, the index itself, I go over to the leveraged ETF. So double, usually triple. So I'm watching those, always watching oil, so USO, energy, XLE. For the last 2 or 3 years, biotech. There's not a day goes by I don't watch biotech. Basically, whatever sectors are in play
Mm-hmm.
on a longer term trend, I'll be watching, and that's gold. Always watching gold. Even if I'm going to selectively trade it, usually when I do get that trade, it's a slam dunk. And then, so those are the main ones I'm always watching. And then, other sector ETFs come and go depending on my sector analysis. If commodities are in play, I'll pull out a basket of commodity ETFs.
Awesome. Boom, 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 boom. Just a couple more here. Dun, 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 dun. Where did it go here? Chris Alotnik, how do I find the T2108 indicator in Thinkorswim? That's a Warden indicator. A lot of people ask about the T2108. And by the way, you can use a lot of different. A T2108 indicator is essentially the percentage of stocks above or below a major moving average. So
40-day moving average. Stock chart, if you're looking for, I don't know I don't use Thinkorswim, but Stock Charts, which is free, has an indicator that measures the 50-day moving average instead of the 40. So you can use that the same way. So just find something like that. They're all over the place. In Telechart, I mean, there's T2108, and there's other ones too that measure different moving averages.
a bunch of people asking, how much is your service? What's going on with it? So, guys, Paul's service is $99 a month. That's the trade report and all of that stuff. We're planning some cool new things with it. New year, new stuff, but it's $99 a month. You get real-time alerts. Paul is awesome about teaching. So let me give you an example. It kind of shows how lazy I am too. So Paul has done 300 reports since he started, which was about 16 months ago. And in that time, I've done like 8 blogs myself. So, so you can see like he's very dedicated to doing these nightly reports and doing all this stuff. And with day trading, you don't really need as much blogging type of stuff. So I just stopped doing it.
Yeah, you're on there you're on there in that chat room every day, so it's the same thing.
I just hate blogging. I mean, that's just what it comes down to. I mean, I have Saeed, so Saeed, hopefully he comes to Vegas and meets us too. You'll love him. He's probably about the same age as you. He's got a daughter, awesome guy. He's from Queens, Bengali guy. And he is, I mean, he is a badass trader. Like he's a killer. Like he really is. Like we have a whole, so all the traders of our site are Indians.
Chat room. He's got great stuff and on Twitter.
All the traders
so
of our.
He's going to be in Vegas?
Yeah. So we'll have you guys. We'll all be together.
All right, that'd be great to meet him. Yeah.
Yeah, he's the man. So he's the guy that actually now sits with me. His full-time job is basically he's an awesome trader, but his full-time job is to babysit me on chat sometimes. So when I get crazy, he's like, hey, as an Indian guy, he's like, it's time for you to go to the beach. So that's like his thing. It's time for you to go to the beach. And so like I'll know like sometimes he'll be like, dude. you need to go out and go to the bar. And I'm like, what do you mean? Like, you never say that. And he's like, that's what I mean. It's time for you to go. And so he's an awesome guy. He's got a young daughter. I think she's 8. Just awesome
Oh,
guy.
nice, nice.
We got like a whole brown team of people. Boom, boom, boom. A lot of people are asking about your story, how you started trading, Paul. Like what? How did you start? Like we all know how I started, but how did you start?
How did I start? You cut off there. How did I start trading?
Yeah, a lot of people are asking. Like everybody knows my story of how I started, but like, what about you? How did you start?
I started right in that dot-com bubble. And, it was the worst time, even though I was making these amazing gains. I think I've told you about it before. I was in law school. I started a little before that, like dabbling with, everyone does with their parent, or a lot of people do with their parents. But I really got into it around law school during the dot-com bubble, and it was the worst time, even though, I was making fantastic gains. I think it was within a month, maybe shorter than that, I went from about $5,000 to 6 figures. And it was insane. I was in law school, got a penthouse apartment. Vikings players were my neighbors. It was it was insane. But and then I was basically trading with the market. I thought I'm going to pay for law school. I'm going to do this. I'm going to do that. And then the crash came in. I lost just about everything. That was my one blow up. Everyone's got these stories. I had one blow up there. A couple other times similar things happened, not to that extreme.
There's always a few.
But yeah. So it happened to me 2 or 3 times, and then it just started to. Once I got into, I think most trading books are essentially worthless, but I read a little about risk management, and that's really when it started to click for me. There came a point where I got good at finding setups, and really I got good when I went away from the books and started experiencing things and kind of learning on my own. Just by going through charts. We talk about pattern recognition. I just started going through charts and just started seeing things kind of on my own. I didn't have a formal mentor, which is great today. Back then, there wasn't this kind of stuff unless you knew someone on Wall Street or something. Now you have so much access to this kind of stuff. But back then, my real mentor was, you talked about him before, the Kirk Report, Charles Kirk. I not for his specific trading style, which he didn't really give a lot of.
Yeah, he's always ambiguous.
But it got me in the right mental space, and that was the biggest thing.
Looking at the right stuff.
And we go back.
Yeah, I still read it to this day.
Probably. Yeah, and he was actually my move to San Diego. His move to Hawaii.
It's awesome to hear.
Was instrumental for me making this move to San Diego, where I'd always wanted to retire to. And when he did it, I was like, okay, this is kind of my mentor. I'm going to do it too.
It's
it gave me the. And I read a lot of his stuff. Not for specific trading strategies, but it got me in the right mental space. And then a lot of it was experience. Just experiencing things, and somehow. It just all came together at one point. And then there was this 5-year run where it all came together, and then I was able to go from part-time to full-time.
Awesome. All right, well, we'll finish this up here. Just a couple things. Ben Daniels. Daniels says, I've had so many teachers and no response rate. You can email Paul, P-A-U-L @bullson.ws. You can email me, K-U-N-A-L @bullson.ws. My cell number is 517-974-1480. I dare you to make an attempt to get a hold of one of us, and we don't get you back. There's always a response rate for us.
Yeah.
Whether we know you're a student or not. The thing about me is I've had so many students. I've taught tens of thousands of students now. I wouldn't know if you're a student or not. Like, if I get a random phone number, I just answer back. You get an email, I answer it back. That's just how we go. I mean, we answer everybody back because in the end, I mean, we're all in the same community, whether you're a member or not a member, whatever. We get emails, we take them down. I think
that's the thing about us. We love trading. We love teaching. So yeah, we're available almost anytime.
we take it down. I mean, that's what we do. I mean, before we had these services, Paul was still answering as many emails. When he had the Market Speculator blog spot, which was a blog spot, there was no members. And, I mean, there was so much traffic that went to the site. There were people like me emailing all the time. He had this Sing JDH1 at AOL email. Nobody uses
still got
AOL.
it, yeah.
Nobody uses
Still
this
got
AOL
it,
email.
yeah.
And he got as many emails then as he does now. I mean, and he answered them then. And he answers his emails now. I mean, that's just how it goes. Miles says that, hey, he had a $3,000 account before he joined the swing trade service, and he's doubled it in the last couple months, which is awesome.
Awesome. Fantastic.
That's actually, I mean, that's really good. I mean, people always focus on, the absolute number, but that's a double. I mean, a double is
100% gain. Yeah,
just,
that's
and
amazing.
you have such little leeway when you have, a smaller account. A bunch of people say, I've been paying $8 a trade. Like, how do I get a better commission? I have $2,000 accounts. Interactive Brokers is a per share. You can negotiate with your current broker and tell them, hey, go after yourself. I'm going to go somewhere else. There's small brokers like Just a Trade, Options House that are like $2, $3. But I think, I mean, $2,000 account, it's hard to pay $7, $10 a trade. I mean, it's just, even if you don't trade a lot, it's a lot. Every dollar you can save, and as an Indian person, I'm just a big believer in trying to save whatever you can.
Yeah. The other thing with I like interactive brokers. The other thing I've noticed, and maybe it's not quite the same as some of the direct access stuff you use, but I've noticed executions are much
Awesome.
better on interactive brokers than they are. So even if you have to take a bigger position and pay maybe $6 or $7 on the commission, you're getting that really good execution. So I've been happy with it for swings.
Every penny counts. I had a session with Chaim Bodek, who's our technology officer at our hedge fund. And Chaim is the chief whistleblower for the federal government for a case against the HFTs, because when he had an HFT, he had uncovered all sorts of things. So Chaim did a thing where he showed me, like, if I use Ameritrade versus a direct access broker, what I would have saved on each trade. He dissected every single trade I did for months. And what what I found out was that, because of the spread and stuff like that, and when you hit market, market order, what actually happens, I would have saved 1 or 2 pennies on every single trade. Well, for example, I actually trade about 2 million shares a month, which sounds horrendous, but because I day trade and I trade a lot of $100, $200 stocks,
over and over again.
And I trade a lot of $1 stocks, and $2 stocks. I trade everything. I trade a lot of shares. So he's telling me, like, look at this one. I'm telling him, like, how I want to improve my trading. And I got to be more disciplined, and I got to do that, and I got to do this. And he goes, Canal, those are great. Those are psychology reasons. But he goes, what about this? Do you have a technology reason? And I go, no. And he goes, imagine if you save 1 penny a share on 2 million shares. What does that equal to? Do you hit your goals? And I'm like, shit, I go really past my goals. And he goes, yes. And it has nothing to do with your trading. He goes, this is happening in your account on a regular basis. And so Interactive Brokers is actually one of 2 retail trading accounts that do not sell sell access. Ameritrade, a Charles Schwab E-Trade. What they do is, if you Google it, they have a payment for order flow business. It's called payment for order flow. So Ameritrade, if you ever use Ameritrade, you ever try to buy on the ask on Ameritrade, and you won't get filled sometimes. And then you buy in the ask, and you buy in the ask. You have like 5 different orders going, so you're trying to buy in the ask, and you don't get filled.
It keeps going up. They wait as you go up and up.
Yeah, they go up. And the reason why, and so at some point you get frustrated, just market order it, and then it drops down 10 cents. And you're like, what the fuck? Well, the reason is And if you just Google payment for order flow Ameritrade, Ameritrade will have this in their prospectus. The
Uh-huh.
reason is that Ameritrade sells off their order flow. As soon as you hit the buy button, it literally will go to 30 or 40 different market participants, Citadel hedge funds, HFTs, and they bid on who gets to actually execute your order flow because they're going to game to see how they can manipulate your order, whether they trade against you, whether they route it a certain way. And so that's where the delay comes in on Ameritrade versus Interactive Brokers, whose direct access, they don't sell their order flow. And so
Oh, they do. Okay, yeah, because I'd noticed that right away when I went to Interactive Brokers that wow, these executions are just so much
yeah,
better. And I with
only a
swing, I
professional will
never
know.
really, yeah, with swing, it wasn't. It's still important, but wasn't quite as important. But as I started trading more and I'm doing more day trading, I just noticed a huge, huge difference.
It's huge. We did so much uncovering on this stuff, and it was just crazy, like what Chaim was
Yeah, I
telling me.
remember you did a webinar with him, right? I've been meaning to watch it.
Oh, I mean, it's fantastic. He's a genius. I mean, he really is. I mean, he does the technology in our hedge fund. And, like we now like stops. Your stop losses get gunned. So like
Uh,
we do like in our stops, it's just automatic. Like when I'm trading in my hedge fund, I use a hard stop. So
mm,
when I do a market order or buy a stock, it goes through a certain route. When I put a stop loss, it actually goes through a dark pool, so nobody can see it.
oh,
So like
nice,
you know,
nice.
and so like he's helped me
So you
with
don't
that
have to
stuff.
use, so I use mental stops as much as I can so no one
So
can
do
see it,
I.
but you're actually able to hide it.
Yeah, I use mental stops as much as I can too. But like I was telling you, like the gambler mentality of me that you had to shake out, it's
Uh-huh.
always in me because I always
Yeah.
believe that I can make it back. So when I use mental stops too, but when I use them too much in fast moving stocks when I'm day trading, I
Mhm.
always get myself in trouble because that like say like like some of these AQXPs, like you ever see ITAX, like these stocks that go up 200
Yeah.
300% a day. When I use a mental stop and they go, and when I do it, I might trade 500, 5,000, 6,000 shares of these things. When I use a mental stop and it drops 50, 60 cents because I froze, well, guess what? It's thousands of dollars. And it's happened to
Yeah.
me a
Yeah.
few times over the year. My members have seen it. We talk about all the time. It's like when you use a mental stop and you have too many shares, then what happens is you freeze. If you have
Yeah.
100 shares or 500 shares, when you broke through your mental stop, I mean, you'll just get out. It's like, whatever, I lost a few $100 or 500 bucks.
Now you're waiting for it to come back.
When you have 6,000, 7,000 shares, you're like deer in headlights, right? It changes who you are as a trader. Those type of situations, you have to use a hard stop when you have size. So I won't use size. Like today I traded Amazon. I was trading 200 shares. I don't need a hard stop in it. Amazon's a well-known
You can
stock.
stop out. Yeah, it's not a big deal.
And it's got HFTs and algos. I don't want to put my stops there, anyways, but it's only a couple of hundred shares. I can manage it. When you have 7,000 shares of a very fast moving stop, you freeze. Like the worst person that you are comes out. And so you got to use them. And
Yeah.
so I put them in dark pools now, and it's helped a lot. Like I know that I'm not going to get stop gunned necessarily, unless it's a big stop gun. But it won't be by the pennies. Just a couple other people for dun, 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 Paul. Can you just give an idea? How many people have you mentored besides me? I mean, a lot of people are asking, like, I mean, I know Phil, I know Justin. I've met a million of you.
Um,
I met a
In
million
the
of your
past,
students.
I've mentored quite a few, right now, formally, I keep it under 10 at a time, because it's really time consuming. We meet once a week for an hour, so that's, 10 hours extra for me. So there's actually a wait list right now, but, I got through about 8. So in the last year, about 18 people, which is really the max of what I can handle at one time.
And folks, for me, I do 60-day boot camp. I can do it around the clock. I do around the clock. That's just how I do it. Paul is a man. I don't even know what to say about him because, I mean, holy shit. I'm so excited to see him in Las Vegas that I give him a big hug. I owe him
Let's
something,
take over Las Vegas.
you know. And Paul, you know, once you want, wait till you see, wait till you see my presentation. The next year we're gonna get you in on it, and
All right, all right.
we're gonna do something special, folks. We really appreciate it. Paul's got kids and he's got a million things to do. Paul,
Oh, I
dude,
sent the kids out. They're out.
hugs, hugs, man.
If I had the kids here, it would be there'd be
Hey, a few people
a lot of
asked.
chaos right now.
One last question. A few people asked this. I don't believe that there's a good book about this. People ask about swing trading books. Guys, Alan Farley's okay. Dave Landry's okay. The
You know,
William O'Neill's
there
okay.
is,
But I don't know if you can make
yeah.
money.
I obviously haven't read all the books, but going
I
back
have.
to the books that I read in the past and seeing what works now, uh, I always tell people most books are BS. I like trading in the zone for the mental game.
Yes.
You probably read that at one point. Who was the author? Is it Douglas?
Michael
So I would
Douglas, Mark
highly
Douglas,
recommend trading in the zone.
Dr.
And most
Steenberger
of
is
these
awesome.
books are not, we don't even know if they're successful traders or not.
No
From
clue.
a lot of these guys, they're just packaging what they've seen other people do.
Dude, how awesome is
So,
this? When I speak at the Traders Conference, Mark Minovineri and Jack Schwager, I'm like sandwiched between them. And
oh wow,
I was
wow, nice.
out of respect, I was actually trying to go before them.
Uh,
No, I was trying to go after them actually. And they're like, well, why are you trying to do this? I go, well,
you want to
listen.
follow them
I go,
up?
listen. I don't know if these guys trade for real. I don't want to go before them because ain't nobody gonna pay attention. You know, once I put on a show, everybody's gonna wonder if these guys really trade for them. Nobody knows. They're great books, right? But you don't really know. The thing about books is they're just books. And Paul's a service. He's got a Google spreadsheet of all his trades, the good, the bad, the ugly. We don't cross out trades. He,
No,
he's got a couple losses that even I question him on. Now I'm like, dude, what
you
happened?
did. Yeah, you're like,
I go,
why'd you take this? And I was like,
what happened with this nugget trade? It was like a
yeah,
20% loss. It was just only one. All his losses are like
yeah,
1%, 2%, 3%, 1%, 1%, 2%. And there was this nugget trade. And I'm like, dude, what happened with this nugget trade? He's like, it gapped down. There's nothing I can
yeah.
do. And, but he gives you the good, the bad, the ugly that you don't find in books. You read Sam Bernstein's book of like how to make money in stocks or whatever. He'll tell you how much money he made. Well, Paul will tell you, like, if I have $100,000 account and I do this, I'm going to make this, and he gives all his alerts, and we put on a spreadsheet. And even better, he analyzes and tells people, like, this is why I did right, this is why I did wrong. And that's all you can really ask for because nobody beats the market. Very few, 1% of people. That's the game. I mean, I don't know what else to say. I mean, you guys will see us in Vegas if anybody's out there. Check out our swing report. It's awesome. We have a free trial. We'll email it to all you guys. You go on Bulls on Wall Street, you pick the part-time trader, you will see it. We'll email it all out to you guys and this webinar also. Paul, you got anything to say?
Yeah, just give it a try. Even if you want to take a free trial, go ahead with a free trial. Email me with any questions. Come see us in Vegas. I'd love to meet all of you and anyone here in Southern California, San Diego. Just hit me up and we can have lunch. Or I'm always available.
Omar Talla just mentioned that he's been running around town. He saw somebody with a Sing license plate, and he thought it was you. I didn't think that you would have your own name on a license plate, so I didn't say those.
No, that's not my style. No.
That'd probably be more my stuff.
Yeah.
Folks, thank you guys. Paul, dude, a 3-hour webinar is really more than we can ever ask for. Appreciate it, my man.
No problem. It's awesome. We'll do this again. We keep talking about it. We got to make it a regular thing.
Yeah, I agree. Guys,
All right.
take care. Everybody, thank you so much. Take care.